Good morning, everyone. So, we are discussing a very important subject of customs. And as you all will be aware, today customs is a very different set of practice. And the best part about customs is normally what people fear a lot whenever I speak to many youngsters or people in profession, they always fear and they always are concerned about competition. But a good part of customs practices, there are very few people in this practice. Yes, the most challenging part in customs is that customs practice is very difficult when it comes to the procedural part. Difficult, I don't know whether it's the right word, but it is the entire customs is based on a lot of procedures, a lot of forms, a lot of technical aspects, and the most important part is it keeps on changing. So you have to be very much in touch with the customs notifications, the regulations, and customs also has constant changes in the rates, in the exemption, because see, customs has a direct bearing with international business, international market, and also with foreign governments. So, like today, our exports to US are facing some challenge, but at the same time, our imports from Russia, China have bettered a lot. Similarly, now India has signed FTA with UK and it is in process of signing the same with other European countries. So these things are happening at a very fast pace. And once any of these things happen, so you have a standard procedure of doing things. You have standard forms, standard uh, restrictions, conditions. Suddenly, for a particular country, import or export, it changes. Suddenly, for a particular type of goods, you have a new set of duty. Suddenly, for a particular type of situation, you have some additional procedures to be followed. This is where the customs practice is slightly challenging, but that is why people in this practice are less. And that is where, as an upcoming professional, you can aspire to be in customs practice exclusively. Now, till now, the topics that we were discussing in customs were what? First was the levy, where we studied some important definitions. Then we studied charging section. Then we studied exceptions and special circumstances in charging section. The second chapter or the second unit was dealing with types of duty and classification, that is, how to find out which duty is applicable. Then the previous chapter, which was there for 2 sessions, was on valuation, which was very detailed and we studied in depth the various custom valuation rules. Today, we are on the procedural aspect of customs. Here, we will be studying the entire flow of how custom imports happen, how custom exports happen. Again, like all other previous chapters, more emphasis and more provisions you'll find relating to imports in the customs law for obvious reasons, and comparatively lesser procedures for exports. Now, when you are studying these procedures, you have to keep in mind certain things which I have been saying from day one of this subject. That is, customs is not only for the purpose of collecting tax. Like generally, any taxation law purpose is revenue to the government. Customs purpose is revenue plus control, monitoring, ensuring that whatever is coming into India or going out of India aligns with the policy of the government about which I was talking today at the start. So since government is constantly having different understandings, engagements, different treaties, agreements, so you have to ensure that customs are aligned with all these, because that is how, or that is what I should say, is the importance of the customs authority and the customs department. So custom is your first, like how you have firewalls in your systems. Whenever anything from outside is coming in, firewall is the first one to screen it and to decide what should be allowed inside your system and what should not be allowed. Same thing is our customs department. Now, in this import export procedure, if you remembered, I had already informed you, or we had discussed the procedure twice, first in the initial part and then again, that how does custom procedure flow. So ship is coming to India, but it will not directly come to the port. It will first wait outside. It will send a very important document called as Import General Manifest. It is that document which contains a list of what all goods the ship is carrying, including the goods which the people on the ship carry, that is luggage, the cargo that is loaded, the ship stores, that is the ship required material like fuel, food items, etc. So everything that is carried in the ship is reported in that document called as Import Manifest. Similarly, there is another report that is about the various passengers, the crew members who are traveling. It is same like Import Manifest, which is for goods. This report is for the people on the ship. This report is filed. Customs check the report. If they find that everything is proper, all these people, all these goods can be allowed inside India, they allow a permission called as entry inwards. Now, important, even though the name uses entry inwards, it is not the permission for coming inside India. It is the permission for allowing you to unload these goods and passengers in India. So, this entry inward permission is permission for allowing you to unload your goods. Now, important, since we want that you should come to a place where the customs are present for checking, for your assessment, hence, the condition is put on the person in charge of that conveyance that whenever he is coming to India, he should compulsorily come to a custom port or custom airport. What is custom port or custom airport? Those airports where you have custom authorities. Like how we call in Bombay, this is international airport, this is domestic airport. So on domestic airport, there are no custom authorities. That is the difference between domestic and international airport. So for whichever airports you say this is international, there will be custom authority. Whatever airports you are saying this is domestic, there won't be custom authorities. So whenever they are coming, they have to compulsorily land at a custom port or airport. Now, take permission of entry inwards. After getting the permission, the ship can unload the passenger goods. The unloaded goods will go compulsorily to the authority at the port who acts as the custodian. Generally, it is called the port trust authorities. So goods are not given to you. The goods go under the custody of the port trust authorities. Thereafter, after these goods go to their custody, you as an importer will go to the customs department and you will file the most important document, that is bill of entry, which is the permission for clearing your goods. Along with the bill of entry, you provide all the details like your invoice received, the bill of lading, and all other relevant documents which are required to prove that these goods belong to you. Then assessment is done on the basis of bill of entry, the duty is determined. Now you have three possibilities. Either you want to re-export, either you want to clear it immediately, or you want to transfer it to a warehouse, which is a customs warehouse. In first scenario, when you want to re-export, no duty has to be paid, but the marking will be done that these goods are to be meant for re-export. So from there, they are kept at that place from where they will be re-exported in the next ship. Third, where it has to be shifted to warehouse, No duty is payable today if this has to be shifted to a custom warehouse, which we call as warehousing. In that case, whatever duty is calculated today, 3 times of that duty, the importer does not pay. He gives a bond and a security of that much amount. And under this bond, these goods are shifted to the custom warehouse. In the second case, where the importer wants to clear the goods immediately, this duty determined has to be paid. The proof of duty payment is to be given, and you can take the goods from the Port Trust Authority. Third scenario, where the goods were shifted to the custom warehouse. Now, interestingly, the ports are at the borders of India. Custom warehouses can be next to your factory. So they are as much inside as much is you and me and the businesses. So warehouses may be within your own cities. So now the goods are physically inside India, but till now custom duty has not attracted, you have not yet paid. Now, when you are removing the goods from these custom warehouses, again you file a bill of entry. This is the second bill of entry you have to file, because on the basis of first bill of entry, the goods were removed from the port where they were first imported and kept in the warehouse. That bill of entry is called as into bond bill of entry, because it is for keeping or taking the goods inside the warehouse. Second bill of entry is called as ex bond bill of entry, which is for removing the goods from this warehouse. Again, assessment is done on the basis of this second bill of entry. Duty is determined. The importer pays the duty, the warehousing charges. If there is any interest penalty, everything is paid and the goods are cleared. Similar procedure happens for export. In case of export, you bring your goods to the port, you file the shipping bill, or it is also called as bill of export. Assessment is done. In 99% cases, there is no duty. So you are directly allowed to load your goods on the ship. In case there is a duty, you have to first discharge the duty. Then you can load the goods on the ship. The ship will give export manifest, like how at the time of arrival they were giving arrival report or import manifest. Now they are going to give export manifest. Customs will check that. If everything is proper, they will allow the ship the permission to leave India. And then only the ship can leave the port and leave India. That will be completion of exports. Now, besides this, you have special provisions when imported articles are brought in. You have some special provisions relating to ship stores. What are ship stores? So, generally on a ship, the different things that are carried in the ship can be classified into firstly cargo. Cargo refers to all those goods which are imported by thousands of importers in India and which is coming through the ship. So main purpose of this is importation of goods. So the goods which are imported through ship is called as cargo. Sorry. Second type of goods on the ship is the passengers and the crew members who are traveling. They are carrying their own baggage, luggage. So second is the baggage or luggage, second type of goods. Third is, since the ship which is doing this journey will be in journey for 20 days, 25 days. At times, a ship goes to multiple places, so its journey may go as long as 2 to 3 months. The ship has to carry various things which it will require during the journey. So it carries all the spare parts, so that if there is any problem in between the sea and the ship has to be repaired, it can be repaired. It carries sufficient fuel, food items for all the people on the ship. So these are items which are required by the ship during its journey is called as ship stores. So there are some specific provisions for that. Similarly, the luggage which people are carrying, the crew members are carrying, there is a special provision for that. Then there are some special provisions. If you remember, I had also spoken about this at the very start. What is transit and transshipment? So let us say a ship is coming to India. It is first coming at Bombay port, and from there it will go to Visakhapatnam port, Chennai port, and even to your Kolkata port, and then leave India. Now, when it is coming to India, it is carrying goods pertaining to all these ports. At Bombay, it will only unload goods for Bombay port, and remaining goods, which is meant for Visakhapatnam, Chennai and other ports, it will carry along with it and take it further. This is called as transit. Second possibility is same. The ship carries the goods for all these ports, but it is not itself going to go to these ports. It will unload all the goods belonging to all these ports at Bombay only, and it will leave. Then the customs authority at Bombay port will arrange to dispatch these goods to the respective ports through other ships. Many times, if it can be transported through trucks, even through road, through trucks. So when this ship is changed, when the goods are transferred from the first ship to the other ship for completing this transport, it is called as transshipment. So customs law has also provided specific rules and procedures for this. So we'll be discussing all these procedures. I'll need help of y'all in reading so that I will spend more time on explaining and y'all can help in reading the provisions. So y'all will also be focused and attentive. So today, who will help me in reading? Out of all the present? Yes. Who is available and conveniently placed to read out for me? Yes, people present today who can do the reading? Ayush, Prithviraj, Sanjay. Okay, Prithvi say he can read. Fine. Good. Now, as we all know, what are the different situations for imports? Import can happen through sea, air, land. These are the three major possibilities. Further, depending upon what is being imported and how it is being imported, we further classify imports by post. Here, the goods are coming not in a different manner. It is coming by sea, air, land only, but you are not importing it. It has been couriered by someone from outside, or it has been given to the post office, and the post office will be delivering. So there is a whole different set of procedures. Similarly, the baggages, the luggages of passengers and crew members, and the ship stores. So these are the different categories in which we are going to discuss the provisions. Now, before we go to the provisions, there are these special points relating to the procedures. First, one second, students. Okay. No problem, Ayush. That is fine. In fact, I am also having some cold. That is okay, beta. Okay, Yogesh is also there. Fine. Now we go to some important definitions. Out of these, whatever are important for learning, I'll let you know. But other than that, this is for your understanding. So first definition is adjudicating authority. To understand this, adjudicating authorities are the officers who are posted at various customs. So what is the role of these officers? Whenever goods are being imported, exported, the main role of these officers is to check and pass the orders under this act. Now, what type of orders they are passing? Different types of order, like right, starting from the first one, entry inwards. Last one, entry outwards. That is giving the permission to unload the goods or giving the permission to the ship to leave India. Similarly, during the entire process, at different stages, you require different permissions. So these custom officers who are authorized to pass any order, give any permission, is what is covered in this. And these officers are called as adjudicating authorities. Further, another role is that they have to also determine the customs duty. So whatever assessments are done, they are the one who finalizes them, accepts or rejects them. They have the power to confiscate the goods wherever they find something illegal is attempted. And also pass orders relating to imposing penalty. So these are the different actions taken by these authorities. They are adjudicating authorities, they are the officers. What is important is this definition or this category will not include the CBIC, that is the board. This will also not include the commissioner appeals or the appellate tribunal. What is the importance here? Board is anyways the central authority which is entrusted with the role of managing the whole law. So anyways, board cannot do these things. It cannot pass orders because it is not sitting at each custom office. Similarly, commissioner appeals, appellate tribunal, these are appellate bodies. What are appellate bodies? Their role is to act as a judge, act as a court, and to decide that whatever orders have been passed by these adjudicating authorities, when you appeal against them, whether they are right or wrong. So their roles are appeal roles. They are not in the adjudicating function. Then assessment, this word is common. It is even used in income tax. So assessment is the process of calculating the duty. So when the duty is calculated, it is called as assessment. Now in this you compute the duty, the GST, which is a tax, the cess, and any other amount which becomes payable under the act. Further, as we have been seeing under GST, under customs law, you may be collecting duties belonging to other acts. So it may be any duty amount under customs law, or for that matter, any other law for the time in force. Now, for doing this assessment, what are things have to be done? Firstly, you have to do the classification. Because by doing classification, we determine your goods are falling in which chapter, under which HSN, so that you can find out the right rate of duty, whether standard rate, preferential rate, what is any exemption, etc. Then second part to be done in assessment is finding the value, for which we had the previous chapter. Then determining if there is any exemption, concession, any preferential rate, like I was just mentioning. You have some free trade agreements, you have some preferential rate agreements. So applying all those things and determining what would be the final amount or what would be the final rate at which duty will be payable. Then assessment also includes quantifying the quantity, weight, value, everything. But this will be required mainly whenever the duty is calculated on the basis of quantity weight. So if you remember, in the topic of types of duty and valuation I had mentioned at the start, under customs, duty may be computed on the basis of value, which is called as ad valorem, or it may be computed per kg, per liter, which is called as specific duty. So this assessment is done of the quantitative figures when your duty is based on quantity. Next, assessment also includes determining from where these goods are originating, that is, which is the originating country. Why so? Same reason. We have free trade agreements, or like in case of Trump tariff today, the Trump has imposed tariffs based on from which country the goods are coming. At times, we may even have some prohibition provisions, that if these goods are coming from this particular country, they are prohibited. So for that, determining the origin is very important. And then any other factor which may be required to be assessed to determine duty, etc. Also, whenever we will use the word assessment, it will also mean provisional assessment. Provisional means a temporary assessment done, self-assessment done by the importer, or reassessment done afterwards by the department, or any type of assessment where even the duty assessed is nil. So all types of computation of duty done by whoever, department, importer, temporary, final, everything is included in the term assessment. Baggage is the luggage of the passengers as well as the crew members. Beneficial owner, we had studied this definition in the previous chapter also. It means any person on whose behalf the goods are being imported, exported, and who exercises effective control over the goods. Bill of entry. Bill of entry is the application that you make. So once the goods are imported in India and you want to clear them, now the goods are kept with the port trust authorities. So to clear the goods from them, you have to make an application to them. The application is bill of entry in case of imports. And whenever you want to send your goods outside, again making an application to them is bill of export. Many of these have parallel names also, like bill of export is also called as shipping bill. So for certain things, you have parallel names. Coastal goods. Now see, there are two words: imported goods, coastal goods. So imported goods are those goods which are coming from outside India on which custom duty is yet not paid. Correct? And coastal goods means goods other than imported goods. So other than imported goods, all other goods which are being transported in India through ship will be called as coastal goods. Now, why this distinction is done? Because the customs entire focus, entire energy is towards assessment of imported goods because these are the goods which are imported from outside India and on which duty is yet to be paid. The moment duty is paid on these goods, they are least interested in those goods. So this distinction is made within the customs law that on what you have to pay attention to, what not. So what you have to pay attention to is the imported goods. We have the definition below. And other than that, all other goods are coastal goods. Conveyance means all the modes of transport, ship, aircraft, vehicle. Customs airport, customs port, all these are the designated ports and airports where custom authorities are present, where they have their office and where they are available for doing the assessment and doing the verification. Customs area includes all the areas belonging to customs, which includes customs office, which includes the customs warehouse, which includes the customs station, everything. So custom area is a generic word. Custom port I've explained. Custom station means the custom office, which is there at different ports. Now this definition, students, is important. What is it? The word dutiable goods means what? It means goods which are chargeable to duty and on which the duty is not yet paid. See, this is very interesting. We are not interested in all the goods which are coming from outside India and India. Initially we are, but the moment you pay duty on them, after that we are not interested in them. So we are interested in any imported goods only till the time you have not paid the duty. So dutiable means goods on which duty is chargeable and on which till now the duty is not yet paid. So the moment you pay, I'm not interested in those goods. Fine. So in order to be called as dutiable goods, what are the conditions? It should fall within the ambit of the word goods. So obviously it has to be goods first. Until unless it is goods, you cannot call it dutiable. And second, it is finding place in the customs tariff act. That is some rate of duty is given. Only then it will become dutiable. Entry. Now, entry again, students, is in general parlance understood to mean coming inside. Here in customs, entry, entry inwards, these words are not related to the coming inside. Then what? Entry means the entry made in a bill of entry, shipping bill, bill of export. Now you are saying, sir, what is the meaning of this? To explain it in simple words, in accounts, we use the word journal entry. What is that journal entry? It is when you note that particular transaction in the journal by passing that debit to something credit entry. We call that also as entry. So what is entry? Entry means here recording. So when you record a transaction in the journal, you call it, sir, I have passed the journal entry, or you normally say, sir, I have made this entry. So what do you mean by that? Over there also, how you are using the word entry? You are using the word entry by saying, sir, I have recorded this transaction in our books. Similarly, in customs law, when the word entry is used, it means that when you are recording the name of your goods in any of these documents through which the goods will be either imported or exported, like for import, you file the application for clearing the goods by the name bill of entry. And for export, you file the application by the name shipping bill, bill of export. So the process of recording the goods in these documents is what is entry. Similarly, when the goods are brought into India through post, again there is some entry to be made because the goods are coming from outside India to India. So they record the name of the goods. See, so these documents tomorrow become the base document to determine what all goods were cleared in India or were cleared outside India. These entries in these documents is what is the entry and not the coming inside of the ship or aircraft. So be clear, entry does not over here means coming inside. It means recording in these documents of customs. Exporter The definition is very interesting of importer and exporter. It does not only means the owner. It is any person who says that, boss, I am the exporter. That is what the definition says. So exporter in relation to goods at any time between their entry for export and the time when they are exported includes the owner, beneficial owner, and this part is interesting, any person holding himself out to be exporter. So whoever says, ki, boss, I am the exporter, that person is treated as exporter. Foreign post office, so it is that post office through which the goods which are imported or exported by post are dealt with. So whenever you are sending goods through post or somebody else is sending goods through post and that person is outside India and you have to receive the goods in India, so the goods will go to the foreign post office. Over there, the custom authorities are there. They will do assessment and the goods come to you. That is what is foreign post office. Now, this is the second definition which is important. So first was duty-able goods. Second definition is of foreign going vessel or aircraft. What is this? When a vessel, that is a ship or an aircraft, is leaving India, we are very much concerned with that. Why? Not because of duty only. I again repeat, customs law is not designed only for collecting tax or duty. A major concern or a major purpose of customs law is also surveillance, also having a watch on what is happening. Now, this definition of foreign going vessel aircraft is a very important definition where it says any vessel, that is ship or aircraft, which leaves India and one, it is carrying goods or passengers. Why? Because this is for assessment purpose, duty purpose. But the other requirements are, even if it is not carrying goods or passengers, still I want to have a watch on them because that may be important for the safety, security of India. So this definition has been widened to include even those ships and aircrafts which are going outside India but not carrying passengers or goods. But why? Because we want to have control on them. We want to ensure that they are not threat to our Indian security, safety, integrity. Yes, Prithviraj, please read this definition. So after dutiable goods, this is a second important definition, students. Yes, Prithvi.
Foreign going vessel or aircraft means any vessel or aircraft for the time being engaged in the carriage of goods or passengers between any port or airport in India and any port or airport outside India, whether touching any intermediate port or airport in India or not, and includes
So first part,
any
first part
naval.
is, one second, first part is those vessels, aircrafts which are engaged in transport. So this is what is the expectation, because we always believe that customs law is focused on duty. So for duty, this is what is the vessel or aircraft we are interested in. That is the one which is leaving India and which is carrying goods or passengers. So this is the first part. Okay. What is important is the other part. Please.
Includes any naval vessel of any foreign government taking part in any naval exercise, any vessel engaged in fishing or any other operation outside the territorial waters of India, any vessel or aircraft proceeding to a place outside India for any purpose whatsoever.
Now this is important. As I said, our purpose is also safety of India. Now you all would have seen in the news that many times we have joint naval exercises. That is where we do practice. Our Navy does practice with whom? With Navy of some foreign government. So what they do, they come together at one place. Either our Navy goes to their country, that is in their seas, or they come to our country, they come in our Indian waters, and we practice. This is called as a naval exercise. Now, interestingly, if a foreign naval vessel is near to India, it may not have actually entered the 12 nautical miles, but if it is even near to India, we are very much concerned. You know why? So you would be hearing in the news that we have placed our Vikrant, which is a naval vessel, in the waters near some country like Pakistan or Mauritius or someone. Why? for some other reasons, which is safety and security. Many times you will hear that China has done this, it has placed its vessel near Japan, or America has placed its warships near a particular country. Why? The purpose is either taking an action, either uh, maybe from there they want to launch some attacks. So that is why we are also concerned if any government's naval vessel, that is a navy vessel, is near to our country. So we want to keep a watch on them, even though they have come here for naval practice, but still we want to keep a watch. Similarly, those ships which are so-called fishing vessels, that is, they say that, sir, we have come for fishing. We are not interested. They are not our country's vessels. They may be outside country vessels, but they are doing fishing. And also important, they are not even in our territorial waters, not in 12 nautical miles. But the same reason, possibility that they may be terrorists, or they may be infiltrators, or they may be trying to smuggle something. So they are giving themselves a shield by saying ki we are here for fishing and we have no interest in coming to your country. Anyways, we are outside your country, but we want to keep a watch. So also they are covered. And most important, any vessel proceeding to a place outside India for any reason. Now, this part is so vast that let us say if some hijacked plane, so let us say a plane is taking off and it is hijacked, and now they are trying to take it to some place in Afghanistan or some place in Iraq. Such vessels, aircrafts which are leaving India for any purpose, here it may be even a hijack, we are very much concerned. So the definition is so vast that they want to cover everything which is going outside India. The purpose is not duty only. That you will understand from the vastness of this definition. Correct? So that is what is also explained in this part, ki what is the importance. Now the third important definition, rather from here, all definitions are very important when it comes to exams and for the purpose of preparation. Yes, Ayush, you're right. So Ayush is saying, sir, they must be in custom waters. Exactly. So this is what is the point, Ayush. So that is the difference between the definition of Indian waters, which is up to 12 nautical miles only, and customs water, which extends to even up to 200 nautical miles. So that is what is the point. You're right, Ayush. So it has to be in custom waters. But see, point is what? It has to be in custom waters for us to take some action. But for us to only do surveillance, like for example, even here, let us say they are not in our custom waters. But if even if they are somewhere around, at least we can establish a contact with them, like you would have seen in movies when any such vessels or aircrafts are trying to enter a country. That country's radar, when it intercepts them or detects them, it asks questions. Give your identity. You have not taken permission. If you don't give your identity, we will blast you, shoot you. So this is what is important. So at least we can start keeping a surveillance. So may not be that we will be taking an action. You're right, because if they are not in your custom waters, you cannot take action. So these may be in our custom waters generally, or even if they are not, and if we are concerned, still we will be keeping them on radar, right? Yes, beta. Next important definition, goods.
Goods include vessels, aircrafts and vehicles, stores, baggage, currency and negotiable instruments, and any other kind of movable.
Now, again, when we read goods and when you are reading a taxation law, your interest would be what? That these are the goods on which I want to take tax. But see, they have even covered the medium of transport in goods. So see, goods means the goods which are being carried in the ship. That is okay, but they are said goods include even the ship. Why? Because the moment I cover the ship in the goods, all the provisions in the customs law which deals with scrutiny, which deals with confiscating goods, will also give me power to confiscate the ship, will give me power even to hold the ship and not allow it to leave India or not allow it to enter India. So that is what is the vastness. So this definition again is not only for the purpose of tax, it is designed with the purpose of keeping a watch. Like second, the stores, that is the items belonging to the ship for its journey, then the personal luggages. No duty will be calculated or charged in this. Exceptions are there, like for stores, Like, see, every ship coming inside, going outside, we are not charging duty on the ship because it is means of transport. But why it is there? For surveillance, for monitoring. Same thing is ship stores, same thing is baggage. Interestingly, currency. Now, we are not going to charge tax if you are carrying some foreign currency, but I want to ensure that you're not trying to smuggle in currency or you're not trying to do money laundering. Similarly, negotiable instruments, if you're carrying any negotiable instruments, at least I should have a power to check. And when I'll have a power to check, when I first include it in goods, and then all provisions are designed around that. Similarly, any other kind of mole property, in fact, that is what is goods in the first place. Now coming to the definition of import and export, this we studied in the first chapter itself because there we were studying levy. So import with its grammatical variation, cognate expression means bringing into India from a place outside. Correct? So this we have done. And if you remember, we had discussed all these case laws and we have concluded that now levy is not only coming inside India, the levy will be finalized only when the goods are cleared from customs by filing the bill of entry. Then comes this document which the ship or the importer has to submit. For what? They have to submit to take the permission of entry in ports. This document is the arrival manifest, import manifest, or import report. As I had explained, this covers the details of goods which you are carrying in that ship or aircraft. Imported goods means goods brought into India from a place outside, but does not include goods which have been cleared. So this is important. See, for us in layman's language, all goods imported in India, for us imported goods means coming from foreign country. But here imported goods means only those goods which are coming from foreign country but are also not cleared, that is tax has not been paid. The moment you pay customs duty, the tax is over. Means we are not interested. So they have specifically said and which are not yet cleared, sorry, here, but does not include which have been cleared. So if it is cleared, we are not interested. Correct? So that is what is the important point. And interestingly, we read the definition of coastal goods. So coastal is other than imported, right? So once even imported goods are cleared, that is you have paid customs duty, now they are also becoming what? They become coastal goods. Okay. Read the definition of importer, beta.
Importer. Importer in relation to any goods at any time between their importation and the time when they are cleared for home consumption includes any owner, beneficial owner, or any person holding himself out to be the importer.
So it is
The
same.
definition.
It is same as I had mentioned that importer exporter is not only the owner but any person who claims boss I am importer. We will keep them. Why? Now we'll realize the importance. Please read.
The definition of importer includes not only the owner but also any other person holding out to be an importer. Owner is a person who is holding the document of title to goods, title to the goods. This will include a high sea buyer.
Now this is
However,
what is the relevance. Key importer may not be the original owner. It may be any person with whom the goods are present. Like in case of import, if you remember the first chapter, the original importer has power to forego his goods. So the goods are imported, but he does not want the goods. He can forego the goods. Now in such cases, instead of them, if any other third person comes and says, okay, I'm ready to take these goods. So law will say, okay, so you are importer. That is what is the relevance. Please go ahead.
However, importer also includes any person holding himself to be the importer for purpose of clearance of goods. This is the person who files the import.
So this is a person who will carry out all the procedures. Obviously, procedures is all the documentation and ultimately paying the duty. So that is what is the relevance. The original importer not there, we are okay. As customs, I am bothered only about I want to get these goods cleared by paying the appropriate tax, duty, etc. You paid for us, you are the importer. So you fulfill all the procedures. Then definition of India we studied in the first chapter also. So it includes waters of India up to 12 nautical miles, then the seabed and even the portion in the air which is called as airspace. International courier terminal. So it's like how you have the foreign post office, you have the international courier terminal because now many things are being sent through courier also. Now comes another important definition because many responsibilities, many procedures have to be complied with the person in charge. Now, who is the person in charge? In very simple words, it is the person who is having the control over the entire transportation, who is having the control over that ship, aircraft, etc. So that person is called as person in charge. Please read.
Vessel, the master of vessel. Aircraft, the commander or the pilot in charge of the aircraft. Railway train, the conductor, guard, or any other person having the chief direction of the train. Any other conveyance, the driver or other person in charge of the conveyance.
So, as you can see, for every mode of transport, the person who is having the control means who can decide where to stop, where to land, that person is the person in charge. And then when we proceed with the procedures, you will find that that person is put with multiple responsibilities and roles which that person has to fulfill. And if that person does not do it, the person will be penalized. Now, in customs, there is a huge focus on those goods which are not allowed to be brought into a country. Why? For all safety reasons, the countries may block certain goods, which may include drugs, which may include arms and ammunition, and which may also include those sensitive items which may disturb your country's, what you can say, the internal security, the internal culture. All those goods are put in the prohibited list. And then customs always ensure that these goods are not even unloaded at our ports and airports. The ship may be carrying these goods because see, the same thing may not be prohibited in other country. And if the ship is going to other country, definitely it is carrying goods belonging to different countries. So we are okay. Our purpose is we want to ensure that such prohibited goods should not be unloaded in India. Please read. Read all the three definitions. They are simple.
Prohibited goods means any goods the import or export of which is subject to any prohibition under the Customs Act or any other law for the time being in force, but does not include any such goods in respect of which the conditions subject to which the goods are permitted to be imported or exported have been complied with. Stores means goods for use in a vehicle or aircraft and includes fuel and spare parts and other articles of equipment, whether or not for immediate fitting. The definition does not cover goods for use in a vehicle. Vehicle means conveyance of any kind used on land and includes a railway vehicle.
So prohibited goods, those goods where there is some prohibition. Interestingly, now we'll find the second part is interesting, but does not include goods in respect of which if there were any conditions for not allowing or conditions giving some relaxation. And if you have complied with those conditions and now the customs permitted, so they become accepted goods. So see, you can say there are three categories. Freely importable goods, where there are no restrictions. Third category is completely prohibited, which cannot be imported in any case. But there is an in-between category, which is restricted category. What is restricted? We are not completely prohibiting it. We have put some conditions, restrictions. If you do not satisfy, they become prohibited. If you satisfy, they are allowed. For example, in many countries, keeping a pistol or keeping some firearms is allowed. But we will say, okay, even if your country allows and you are carrying it, we want a license or we want a specific permission. If you have that, we will allow it to be taken inside India, or else you will have to deposit it with the customs. And whenever you return back, you can take it. So these are restricted. Now, if you comply with the conditions, they become eligible or importable goods. If you do not follow, they becomes prohibited. So that is how prohibited will even cover those goods for which there were conditions. Not satisfied, they become prohibited. Satisfied, they become importable. Stores are the items belonging to the vessel or aircraft. And last is the vehicle. Now, interestingly, as we proceed, you'll find that in procedures, there are separate procedures for goods being imported by ship and aircraft. So for them, the procedures are same, but they are different with goods which are imported through land, that is through vehicles. So for vehicles, everywhere you will find something different. Like even in case of stores, the definition of store covers goods for use in the ship or aircraft. So as I said, now fuel, spare parts, food items for the passengers. But for vehicle, there is no concept of store. So it means they have not given the same definition of stores for goods for use in vehicle. So you'll find this in everything what we will study. There are separate set of procedures. They are common for ship and aircraft, and there is separate set of procedures for vehicle, that is import by land. Now we start with the flow of these importation exportation procedures. Now you have to visualize this. A ship or an aircraft is coming to India. It is, let us say, nearing to India. What it will do, it will connect with our Indian port airport and will ask for the permission for landing. So if it is an aircraft, it will ask that I want to land at your port. If it is a ship, it will ask for permission that I want to come and anchor at your port. Now, this is the permission which they are taking from the port authorities, airport and port authorities for the place. Ki bhai, whether you have place, can I land in this? Can I bring my ship and park it here, which is called as berthing or anchoring of ship. But if this is a plane or an aircraft which is coming from a place outside India, carrying goods and passengers, besides taking permission of port airport, which is anyways not covered here, it has to compulsorily take permission of customs. That is what is the entry inward permission, which we are going to come in the next part. But in order that you take the permission, the basic first requirement is you should only come to a port where there are customs. Hence, starting the procedure with 29, the very first condition, the very first procedure is there is some responsibility put on the person in charge. Now, who is this person in charge? We already studied it is the person who's having the control over that ship or aircraft. Now, what is the responsibility put? Section 29 has put the responsibility that they should compulsorily first come to the port airport where there is customs. First rule. Second part, which is a relaxation. In case there is some emergency, like suddenly the fuel, you have run out of fuel, or there is some emergency because of which you have to compulsorily land, otherwise there may be a tragedy, there may be a mishap. In such exceptional circumstances, this rule is relaxed. Then they say you can come at other place also. Other place means which is not a custom port airport. But then they have given additional uh, conditions which have to be complied with person in charge. Like immediately after landing, they cannot allow the passengers and goods to be unloaded. They should first contact the customs, if not a police station. Only after that respective officer comes. After that person allows, you will allow loading, unloading. Again, exception to that. If let us say the aircraft is going to catch fire, then you may even unload. So all these things are given here. Please read.
This section provides that the person in charge of a vessel or an aircraft entering India from any place outside India shall not cause or permit the vessel or aircraft to call or land for the first time after arrival in India or at any time while it is carrying passengers or cargo brought in that vessel or aircraft at any place other than a customs port or a customs airport as the case may be unless permitted by the mode.
So first part is compulsorily making you to come at custom port airport. Now they will give you relaxation for emergency situations. Read the exception part. This is only what they have clarified. We need not read that. Read from here.
The above provision is not applicable in relation to any vessel or aircraft which is compelled by accident, stress of weather, or other unavoidable cause to call or land at a place other than a customs port or customs airport. However, the person in charge of the vessel has the following obligation cast on him. He will have to report the arrival of the vessel or landing of the aircraft to the nearest customs officer or officer in charge of police station and produce the logbook if demanded. He should not allow any unloading of goods without permission and should not allow any passengers or crews to leave the immediate vicinity of the vessel or aircraft. However, the goods can be removed or the passengers and crews can be allowed to depart if the same is necessary for reason of health, safety, and or preservation of life or property. He should comply with all the directions given by such officers with respect to any such goods.
So now you will be allowed to come to a place other than custom port airport only in exceptional conditions, and thereafter further restrictions, conditions are put. You have to report to the officer nearby. You should not allow unloading except with their permission, but again an exception. However, the goods can be removed, passengers can be unloading if it is for the reason of their health safety. And last is whatever instructions will be given to you by those officers, you have to comply with them. Now, the first step is over. So you are coming to custom port only. So first obligation was come to custom port airport. So visualize your plane, your ship is coming to a custom port airport. Now what is that? Most important point is this. If you are coming to a place in India and you are coming from a place outside India, if you are carrying goods and passengers, you cannot unload them. So let us say you have taken permission with the port airport authorities that can I land. They have given you the permission. Your ship has reached the port. Your aircraft has landed, but still the passengers cannot come out. Still the goods cannot be unloaded until and unless you take the permission from the customs of entry inwards. Again, I repeat, entry inwards is not the permission for coming into India. You have already come in India. You are stationed. Your aircraft or your vessel is already in our port airport. Your permission that you are taking is seeking the permission from the customs, allowing you to unload the goods and the passengers that you are carrying. Now, for getting this permission, which is required in 31, which says that you cannot unload the goods until you are given this permission. So, entry inwards is the permission of unloading. Though the name suggests entry inwards, means it appears that they're talking about permission of coming inside. No, you are already in the port airport. That permission you take from the port authorities. Ki, sir, can we land here? Can we come to your port? If they allow, you can come. But you cannot unload. For that, you require permission of customs. Now, customs will give you permission after you submit two types of report. One is the report about the persons who are there. So persons will be either the passenger or the crew with their names and other details, and what goods you are carrying. Now, this report, which is the report detailing the goods, is called as arrival manifest or import manifest or import report. So these are parallel names. Some are used for sea and air, and some are used for vehicles. Now, what is this report? This report is the detail of all the type of goods, cargo, baggage, stores, whatever you are carrying in this, including those goods which you may even take to other ports after this. So we want to know everything what is there inside your ship or aircraft, and that details you submit to me. I am the customs. You submit to me using a format which is this. Now in this section, they are talking about what will be this report containing, by what time you have to file this, how you have to file this, all procedure formalities are there. After that, another section 30A is about same report relating to passenger details. And then 31 is, after you have submitted these details, I will check the details. I will ensure whatever goods and passengers are there in your ship aircraft are eligible to be allowed to unload in India. If yes, I will give you permission of entry inwards, which is the permission allowing you to unload. So Ayush is asking, so sir, if aircraft just needs fuel? Yes, exactly. That is the difference. See, many times aircrafts or even ships, they come to a port not because they have to do anything with the port or means with that country, sorry. They are like, see, when the distance is very long, like if you are following news, especially international news, you will find that recently even India has acquired, and few countries are having those type of bomber aircrafts where refueling can be done in the air itself. As against that, you will also would have read that when one country had attacked the other country, like if I'm not wrong, I think Israel had attacked some places in Iran. So at that time also, it had used the same bomber aircrafts, which refueling could be done in the air, or at times you'll hear that they had kept their aircrafts in some other country's airport ready so that from there they can take off and do bombing and come back. So that is where Ayush, you are right. Many times aircrafts or ships, they come to your port not because they want to do any unloading over there. At that time, they will not seek the permission of entry inwards. Yes, they are seeking permission. The authorities at the port, including the customs, are concerned with the safety security. So they will allow you to come inside the port first when they are satisfied with the safety aspect. And you have to give the proper reason, like as you said, refueling the fuel, because at times for long distance journeys, the aircrafts many times land in between ports, though there may be no people, no passenger getting down or getting into the plane, but only for refueling the plane. Or at times, because of stress of weather, they may land down. If there is some damage while the ship or the aircraft was in journey, just for repair, they may land down. So in these circumstances, they may not seek the permission of entry inwards. You're right. Yes, beta, please read.
Delivery of arrival manifest or import report, section 30. After ensuring that the
What happened, beta? Your
shall
voice.
I read from the second para directly, sir?
Sorry, you are reading, na?
Okay, I repeat. After ensuring that the vessels or aircraft are landed only in approved customs port or airport, further duty in cast upon the person in charge of the vessel to deliver the arrival manifest or import manifest. Arrival manifest or import report is a detailed information to customs about goods in the vessels, aircraft which have been brought in at any port airport for unloading at that particular port or international airport, as also that which would be carried further for any other ports oblique airports. Declaration of such cargo has to be made in prescribed form, which is termed Import General Manifest or IGM, and in prescribed manner. Imports via land route require filing of declaration called import report. Goods involved.
So for CNR, it is called as IGM, or in short, Import Manifest. Full name is Import General Manifest. And for land, it is called as Import Report, right? Uh, that's it. Now, this part is important. What is the time limit and the mechanism? Please read.
Time limit for delivery of IGM/IR. The person in charge of a vessel or an aircraft or a vehicle carrying imported goods or any other person as may be specified by the central government by notification of in the official gazette in this behalf shall, in the case of a vessel or an aircraft, deliver to the proper officer an arrival manifest or import manifest by presenting electronically prior to the arrival of the vessel or the aircraft, as the case may be, and in the case of a vehicle, an import report within 12 hours after its arrival in the customs station in the prescribed form.
These are the details how both things, both means one relating to CNR and the other relating to land, is to be done. Please read.
Where the imported goods are brought in a vessel, import document is arrival manifest or import manifest. Time limit is any time prior to the arrival of the vessel or aircraft. Mode of presentation is electronic filing.
Very important is when it is for vessel and even aircraft, it is common. What is common is this report has to be filed even before arrival. Now, this is interesting. Other, in case of land, you file after arrival. Here, you have to file it even before arrival. So, and now since it is to be filed even before arrival, obviously the mechanism would be electronic form. So same is for aircraft also, and for vehicle, please read.
Where the imported goods are brought in a vehicle, import report time limit is within 12 hours after its arrival in the customs station and prescribed manner will
So,
be used for that.
so it can be filed, the report in case of vehicle even after arrival. By obvious reasons, if a person is coming via truck through land route, that person may not have the facility of doing it online or even prior. Many times, the who is the person in charge of a truck? The truck driver. He may not be that well educated. So, in case of trucks, that is by the land route when people are coming, which includes even train, they are allowed to do it even after arrival. But for ship and aircraft, it has to be done prior and obviously using the proper route. Now, if you do not do this, there is a penalty of up to rupees 50,000. In some special cases, even late filing is allowed and even amendment is allowed. So what is amendment? So you have named few goods. However, later on it was found that these goods are not uh, present in your ship. Some other goods are present, but you have named some other goods. So such corrections are allowed, and such corrections will be done provided the custom officer feels that you had no fraudulent intention. It was genuine mistake of not providing those details. So this is about the report relating to goods. Now we come to report relating to passengers. As you can see, this section was not there originally act. It is added later on. So originally it was only the report relating to goods. Now we have the report relating to passengers also, which has to be submitted. Please read.
Passenger and crew arrival manifest and passenger name record information. The person in charge of a conveyance that enters India from any place outside India or any other person as may be specified shall deliver to the proper officer the passenger and crew arrival manifest before arrival in the case of an aircraft or a vessel and upon arrival in the case of a vehicle, and the passenger name record information of arriving passengers in such form containing such particulars in such manner and within such time as may be prescribed.
So simple. What details I require? I require detail of all persons, which includes passengers and crew members who are in your ship, aircraft, etc. And what type of information I want? I want the name record and information relating to the passenger in such form and containing such particulars which we will be prescribing. Again, the penalty for not filing or not complying with this is 50,000. Now, what is the passenger name record information? It means the records prepared by an operator of the aircraft, vessel, vehicle, or his authorized agent for each journey book by or on behalf of any passenger. So like how when you book a ticket, you provide certain details. Those are the exact details which we are asking for. Now, this point I already explained why you require the above reports, because only basis the above report, the customs will decide whether or not to allow you the permission of entry inwards. What is entry inwards? It is the permission for unloading. So the permit to unload the goods is what is the permission of entry inwards. And only after this permission, you can unload the goods. Please read this.
Entry inwards date is crucial for the calculation of applicable rate of duty when your bill of entry has been filed in advance. In case bill of entry is filed before arrival of aircraft or vehicle or before entry inward for the vessel, the relevant date of determination of rate of duty and tariff valuation shall be date of arrival or entry inward as the case may be. Refer section 15 of
This what we studied earlier also. So this is the time of supply under customs. So what is the relevant date for deciding the rate of custom duty? It is whichever is later. So if you have filed bill of entry even before the entry inwards of the vessel, the rate of duty will be the later date. That is the date on which entry inward permission was given. If first entry inward has happened, the permission is given, and later on you are filing bill of entry, then the relevant date, which is the later date, is the date of bill of entry. Fine. Now some small provisions. Now here, Prithvi, you only need to read the heading. The heading itself is sufficient to understand the provision. Please. So now where we are standing, first condition was that at the time of arrival, they have to take permission and come, sorry, not take permission. They have to first come to Custom Port Airport. That they did. Second, submit the reports. That they did. On the basis of checking of the reports, the custom has allowed them the permission to unload the goods. So now they are inside our port and now they want to unload the goods because they have got the permission of entry inwards. Now only read the headings of these sections.
imported goods not to be unloaded unless mentioned in arrival manifest or import report section 30.
Go ahead, go ahead.
Loading and unloading of goods at approved places only section 33.
Next.
Goods not to be not to be loaded or unloaded except under the supervision of customs officer section.
So now your ship is standing. It has got the permission of unloading. The provision requires that whatever goods you want to unload, please ensure that they are mentioned in your report. So only those goods which are mentioned in the report can be unloaded. Just give me a minute. I will attach the charger. A minute, please. Now, so the point says you cannot unload the goods until unless the goods name were mentioned in your report. Second, you have to compulsory unload at the approved places. So these places are those specific areas where after the ship has been berthed or anchored in the port, they tell you that, okay, you first unload and keep it here. Then, most important, unloading should be done only under the supervision of the custom officers. However, you may take permission from the boat, and if they have given any general or special permission, the proper officer may, in some special cases, allow you to unload without the supervision. Now, see, these are those parallel exceptional procedures or carve outs which are given in the law itself. So, in case of regular exporters, later on when you study the FTP, that is foreign trade policy, you'll find that over there special designations, special recognitions are given to exporters who are regular exporters and are regular in paying their duty. In those cases, all these procedures are relaxed. But the general rule is it has to be done only in their supervision. Now comes an interesting concept. I'll explain what the concept is so that you'll understand what this condition is. Now, this section says there is a restriction on goods being waterborne. Now, what is first this? Let us understand. What are goods being waterborne? It means, this phrase means goods carried in the water. What it means? So, I'll give you the real life situation. See, many ports are such where near to the port, the water is not very deep. In some ports, up to the port, the water is deep up to 200, 300, 500 feet. In such cases where the water is deep up to the port, huge ships can come. But where the water is not that deep, large ships cannot come, because I am sure you all would be knowing, large ships, the bottom of the ship is reaching down in the sea to some 100 to 100 feet. Many times, in fact, the storage is below. So the ship's bottom is very wide and it is also going very deep. Now, in such cases, such ships cannot come near those ports where the water is shallow. Otherwise, the ship may get stuck near the port in the mud or the sand of the port. Or if there are rocks, the bottom of the ship may get damaged. The hull, the body of the ship may get damaged. If you know, a few years back, there was such an incident where a ship by mistake had come near the Juhu beach, that side. So instead of going towards the proper Bombay docks, the ship, because of maybe some derouting, came near this. And since near that Juhu Chowpatty area, the water is very shallow. In fact, people go there for picnic and enjoyment. So the ship got stuck up because you have mud. As we all know, if you all have gone to beaches, even if you go inside the water, you feel the mud, and the mud is very sticky. And if even our legs are, if you are staying there for a while and the water is coming and going, you'll find that your legs are stuck in that water, in that mud. So just imagine what will happen for the ship. And the ship was carrying oil. I'm giving you the incident. Few years back, some 7, 8 years back, or maybe 10 years back, I don't recall exactly. So the ship by mistake came on that side, and because of the shallow waters and the mud there, the ship got stuck. And because of that, in the attempt to get out of that mud, see, they pushed on the power lever. So there was a breakage and the oil started spilling over. the oil that it was carrying. And that oil started getting mixed in the water, which caused death of many marine these creatures, many fishes. For many days, dead fishes were coming to the shore by the tides of the water. Plus, there were many dead fishes inside the water. Plus, many plants, the aquatic plants, got destroyed, and also it polluted the entire water near that beach. So, why I'm telling you this so that you understand what this point is. Now, where even at the docks and the ports, the water is shallow. It is not that deep. Yes, it is deep. So smaller ships can come, but very huge ships cannot come. Now, in such cases where the ports are small and huge ships cannot come, or at times, let us say the water is sufficiently deep, but the ship is carrying only few goods. It do not want to come to the port, do everything, and wait there for 4 5 days. Because see, even coming and doing proper berthing or anchoring itself is a task for big ships. It is not easy to switch on and switch off a big ship. So many times, what big ships do, if they are carrying very less number of goods or passengers, they will not come to the port. They will stay outside and they have informed the port, ki boss, I am only carrying goods which is up to two small shipload. You do one thing, you send those small ships, I will unload the goods on those ships and I will leave from outside only. So for practical reasons also, many times the ship may not come to the port. Now in such cases, what happens? In the first scenario, where the water is shallow, what happens is people go, the laborer go inside the water and they carry the goods on their head and come to the port because the water is shallow and the ship is waiting at some distance. In the second scenario, where the ship is waiting in the deep sea, you send some boats from here, smaller boats, in which those goods are unloaded, those passengers are unloaded, and they are brought to the port. Now, in both these scenarios, what is important is the ship itself is not coming up to the port, but there has to be some procedure to ensure that when these goods are unloaded from that ship, they will reach the port. Like, for example, in my second case, when they are unloaded on small boats, it should not happen. Those small boats should run away from that port and go to some other place and do smuggling of those goods. To ensure that, we have a special procedure called as boat note procedure. What is this boat note? So when these small ships will be going, or small boats would be going to unload and bring the goods to your port, these small ships or small boats have to follow this boat note. So what they do, they write down the boat note is the special procedure provided in the customs law for such special scenarios where small boats would be bringing the goods to the port and from there the further procedures would start. That is what is provided in section 35, that where such goods are being brought in small ships or boats from mid-sea to the port, then this section provides that these goods should not get diverted. These small boats should not slip away from there and then unload it on some other places. So for that, this particular procedure and restrictions given. Please read, Beda.
In certain circumstances, like size of vessels, hazardous nature of cargo, etc., the vessel cannot be berthed at the port. The cargo is ferried from or to the ships anchored at mid-sea to the ports in boats, otherwise known as lighters. Section 35 of the Customs Act stipulates that no imported goods shall be waterborne for being loaded in any vessel, and no export goods which are not accompanied by a shipping bill shall be waterborne for being shipped unless the goods are accompanied by the boat note in prescribed form. The Boat Notes Regulations 1976 prescribe the form and manner of issue of the boat notes. However, the board may, by notification, give general permission, and the proper officer may, in any particular case, give special permission for any goods or any class of goods to be waterborne without being accompanied by a boat note.
Proceed, please. So this is what is about the boat note.
Other controls. The following are further controls exercised on the conveyances and the loading and unloading of goods. The goods cannot be loaded and unloaded on Sundays or other holidays observed by the Customs Department or on any other day after the working hours unless the prescribed notice and the prescribed fee are paid. The proper officer may at any time board any conveyance carrying imported goods or export goods and may remain on such conveyance for such period as he considers necessary. The proper officer may require the person in charge of any conveyance to produce any document or answer any questions, and such person shall be bound to comply with the same.
So these are those additional conditions. So one is this boat note, which we studied when it is required. I already explained. Second is you cannot do unloading on holidays except where you take a special permission, where you make a payment of special fees. So some officers may be deputed even on holidays, and then unloading can be done. Second, the proper officer may even board the ship. So while the ship is en route, the officer through a small boat may go up to the ship, may go on board the ship for doing checking or even asking questions. And the person in charge would be required to provide the answers and produce whatever documents he is demanding. So these are all for the control and monitoring purposes. Now, so first the ship has to come at custom port airport done. They have to submit the IGM to take permission for unloading done. Permission unloading given. Now they are unloading the goods. You should unload it at proper place, designated place, only on working days, under the supervision of officer. Done. Now the goods are unloaded. After unloading, the next step is, as I explained at the start, the summary. These goods are not given to the importer directly, though these are your goods, you are having all the proofs. The goods will go to a specific authority, that is, they will be given under the control of that specific authority. Who is that particular port's authority? So here it is called as custodian, but in real case, it is practically the Port Trust Authority of India. So goods are given to them. They will be now exercising control over these goods till you clear them by following the assessment and the other procedures. So now, after unloading, section 45, which is a very important section, you have to remember this because many places in other sections, section 45 reference is given. So your goods will go to the custody of the Port Trust authorities and you have to follow the import clearance at your end. Now, 45 is dealing with this Port Trust authority. It says that goods will go to their control authority, they will exercise control, and only when the customs will give them the permission, see, I have done all assessment, duty payment is done, you can clear, only then they will clear the goods. If in between these time there is any there is any theft, there is any pilferage while the goods are with the port trust, I will not pay the duty. I'm the importer. Why? Because I'm not clearing that many goods. But since the goods were already unloaded, they were in the port trust authorities' custody, and from there they are lost or theft has happened, they will be responsible to pay the duty. All these things are provided in 45. Please read.
Once the imported goods have entered the customs area, there arises the question of who is responsible for the safe custody of goods. This section requires that until the imported goods are cleared for home consumption or are warehoused or are exported for transshipment, they shall remain in the custody of such person as may be approved by the principal commissioner or commissioner of customs or commissioner of customs. This person is called the custodian. The responsibility of the custodian commences in respect of imported goods the moment the ship is berthed in the harbor or the goods are ready for unloading from the aircraft. In major parts, in major ports, the port trust is the custodian. In inland container depots, the Container Corporation of India, which operates the Container Freight Station (CFS), is the custodian of the imported cargo. In case of air cargo, the Airport Authority of India is the custodian in most airports. For goods brought by rail, the custodian is the station master.
So these are the various custodians in different cases. Now, what are their roles and responsibility? This part you should learn. You may get a theory question on this part, the responsibility of custodian. Plus, this is also referred in other provisions, so you should know the backdrop. Please read.
Responsibility of custodian of goods. During the time the goods are in the custody of the custodians, they have the following responsibilities: maintain a proper record of goods received from the carriers and send a copy of the record to the proper officer. Not to permit such goods to be removed from the customs area or allow them to be dealt with otherwise except under the specific permission in writing of the proper officer or in accordance with a general procedure that may be prescribed that avoid subjectivity of the officer as to the manner of removal of such goods.
So simple, they have to keep entire control over these goods. So maintain proper records, and most important, do not allow these goods to be removed without proper permission of the proper officer. Now, this part is again important. What is the liability? Here the point will come that if the goods while they are in custody are lost, stolen, the duty on them has to be paid by the custodian. Please read.
Liability of the custodians. This provision provides that notwithstanding anything contained in any law for the time being in force, if any imported goods are pilfered after unloading in any customs area while in the custody of the custodian, such custodian shall be liable to pay duty on such goods. Therefore, in respect of pilfered goods covered by Section 13, the loss of revenue is compensated by the custodian.
Fine.
The
So
duty shall be
custodian has to pay the duty if the goods are pilfered. Now, it is the responsibility of the importer to clear the goods within 30 days from the custody of this custodian. So 30 days is the timeline given for you to clear the goods from here. If you do not clear, the custodian has the power to confiscate your goods and then sell those goods by way of auction. Now, after the goods have gone to the custodian, now your role as importer starts. Now what you will do? You will go to the customs department. Now this you can do even before. So you are allowed to file bill of entry even before the arrival of ship. So anyways, either you file before or you file after all these unloading has happened. Now 46 is again the second most important section. It will be referred everywhere because wherever the point of bill of entry will come, they will always say bill of entry under 46. So 46 provides that whenever you want to clear the goods, in fact, you have to clear it within 30 days. As I said, otherwise your goods may be confiscated by the port trust. See, port trust is only the custodian. It is continuously having ships coming and unloading goods. So it requires space at the port also. So your goods can be at the port maximum up to 30 days. If you're not clearing, he will give 1 or 2 reminders. He will confiscate and send it for auction. Now, you have the whole online procedure for filing this document. Rather, now every documentation is to be filed online, and the portal, like how for GST you have the GST portal, for customs the customs portal is called as the customs gateway, and it is the ICE gate. So since the word is gateway, they have used the word ICE gate. So it is the customs portal. Now you go to this portal, and on the basis of the documents that you are having, you file the application of bill of entry, so requesting the customs to clear your goods. So now we have the e-Sanchit, which is the paperless transaction. So now everything is online. On this portal, you will upload and you will submit all the relevant documents along with this bill of entry. So bill of entry. So you'll read from here, bill of entry.
Bill of entry is a document of assessment and when assessed becomes an assessment order. The principal commissioner or commissioner of customs may, in cases where it is not feasible to make entry by presenting electronically on the customs automated system, allow an entry to be presented in the prescribed manner and form. The goods may be cleared for home consumption or for deposit in a warehouse or for transit or transshipment. Therefore, there are three types of bills of entries prescribed for these three different purposes. Form 1, white, for home consumption. Form 2, yellow, for warehousing into bond. Form 3, green, for clearance of warehoused goods for home consumption, export.
Now this is interesting. Just wait. See, earlier all these document filing was physical. Even in excise, you had this concept that they had even mandated colors for the various, like in excise, you are supposed to prepare 3 copies of your bill. This was always the sequence. The topmost copy of the bill, which is given to the customer, is white. The second copy, which is given to the transporter, is yellow. And the third copy is pink or green. So in excise, it is pink. In customs, now you are not having 3 copies. Your bill of entry will be for one of these 3 purposes. One, you want to re-export. You want to, actually this year they have not given for re-export. So one bill of entry is for re-export. Next, when you want to clear it immediately, it is white. Second, where you want to send it to warehouse, which is into bond, it is yellow. And when you are clearing from warehouse, after it is stored in warehouse, it is green. So earlier, since physical papers were given, so it was easy to classify. So every time you need not read the details in the bill of entry, what it is for. So they have even given the colors. So at customs office, when multiple bill of entries are kept, for the peon to make a categorization was easy. So let us say in a day, 100 importers have come and submitted their bill of entry. What the peon will do, he will keep all white in one tray, all yellow in another tray, so that for the custom officer, the role is divided. They may send one tray to one officer, another tray to another officer, and only on the basis of the color, it was easy to identify. Now, anyways, everything is now online, so these colors may not have relevance, but this was the mechanism followed. So all these colors and all, why you are seeing, because this is all designed from the purpose of the physical filing. Now, the bill of entry will be supported with all the necessary documents, which shows that it is your goods, etc., etc. And the person, that is the importer who presents the bill of entry, all obviously has to ensure what accuracy, completeness, authenticity, etc. Now, this is an important concept, which is a short note in your exams: warehousing without warehousing. What is this concept? Pay attention. I just mentioned that you are having only 30 days to clear your goods from the port. How you clear? You file one of these bill of entries. One is for immediate home consumption or for sending it to warehouse, whatever it is. But all this you have to do within 30 days. Why within 30 days? Because if you don't do it within 30 days, your goods may get confiscated. Now comes this point. See, you have an option of sending the goods to the custom warehouse. When you will follow that option, you don't want the goods immediately, you want it after 5-6 months or some period of time, but you don't want immediately. So you will follow the other procedure, which is called as warehousing, where you will find the yellow bill of entry, so that the goods will be removed from the port and sent to the custom warehouse, maybe near your city where your office factory is. However, I don't want to follow warehousing. Why? I want goods immediately. But the problem is, I cannot bring all the necessary documents which are required for its clearance, and I'm fearing that the 30 days period is getting over. Now, see the beauty. I don't want to warehouse. I want the goods immediately. But at the same time, I'm not able to comply with the requirements within the 30 days timeline given. Now, how they have matched both this? They have said that, okay, no problem. You don't want to warehouse, but we also want to remove the goods from the port. Why? Because constantly ships are coming. They also want space to unload their goods, and we have to give permission to those ships. Otherwise, the trade would get blocked. So, what is the provision carved out is that even though you don't want to warehouse the goods, temporarily your goods will be shifted to warehouse from the port until you do the clearance. So wherever that 30-day timeline is expiring, or you know that I will require more time for arranging all the documents, like if you recall the previous chapter on valuation, many times there is a lot of inquiries. As an importer, I have to give proof that my relationship with the seller is not affecting price. Now, all these details may take time, or you are following the deductive approach, computed approach. For this, some information is required from someone else, and it is taking time. Now, in all these things, if the clearance is getting postponed, what this provision says, customs themselves will allow the goods to be transferred to warehouse. So physically, your goods are being sent to custom warehouse. But why it is saying without warehousing? Because you have not opted for the warehousing option. You are not going to give them the warehousing bond. You will not follow the warehousing procedure. This is a midway way out to match both the requirement that the port should also get free. There should be space for other coming ships, goods, and at the same time, you also get extra time to clear your goods. So a midway is let me keep these goods in the custom warehouse. So that is why the first word warehousing. And second is what is without warehousing? Without you importer following the warehousing option. So now physically your goods are shifted to warehouse. You take that extra time, bring me the details, we will complete the assessment and you take the goods immediately. So it is your first option only, clearance for home consumption. But for the constraint of time and space, we are shifting the goods to warehouse. That is warehousing without warehousing. Very important point, very important short note from the purpose of your exams. So this is all procedure. Now that 30 days timeline, which I was telling you, is provided. Now, interestingly, we are studying the procedure of bill of entry. In bill of entry, there is no time limit here. Okay, it should be filed within 30 days only. So bill of entry section is not giving the 30 days timeline. Who is giving the 30 days timeline? That previous provision where the goods are kept in custody and the goods have to be cleared from there. Otherwise, the custodian may confiscate and auction the goods and sell it in market. So from there, impliedly, the time limit becomes 30 days for you also to file bill of entry and get the clearance done. So bill of entry provision itself is not giving its own timeline. This is what I'm trying to clarify. See, it is given here. A bill of entry may be presented at any time, not exceeding 30 days prior to the expected arrival by which the goods have been shipped. Now, this is the timeline of 30 days of prior. So, where you want to file prior, that is before even the arrival, that should not be very early. So, it should not happen that your ship is coming after 4 or 5 months and you are filing today. So, over there, also they have given you the time limit. Now, this time limit is given in this provision only, but that is for prior filing. What is the time limit for filing after the ship has come? There is no time limit given in this section of bill of entry. But from that custodian point, we come to that timeline that you should do it even within 30 days. Now, now comes the main part. See, what is the purpose of filing the bill of entry? So, bill of entry is an application seeking permission of the customs to do the assessment. So that assessment can be done, duty can be computed, and either we clear immediately by paying the duty or we give a bond and ship the goods to the custom warehouse, right? Just a minute, please. Yes. So now the assessment provision. Now here there is an amendment or change done long back. Earlier, the assessment was always done by the custom officers only. So after you filed bill of entry, the custom officers were doing the assessment. However, now slowly we are even shifting to self-assessment under customs. So now here, the importer himself will do assessment, and that assessment will be for the time being considered final. In some cases of importer who are regular importers, in other cases, the assessment would be checked by the officer, then it would be final. In this, we'll go to another section 18, which says that where importer himself is not able to make self-assessment, he may approach the officer asking him to do assessment. And if the officer is also not confident, he will do a temporary assessment, which is called as provisional assessment, clear your goods, and in future, whenever all the details are available, you close the assessment. So there are two assessments, 17, which is now self-assessment. Earlier, this was also done by officer only. Now it is self-assessment done by the importer himself. 18 is provisional assessment, where importer approaches the officer. Officer makes a temporary assessment. Importer pays a temporary duty, clears the goods, and after bringing the other relevant documents, then does the final assessment, and the difference is paid or refunded. Please read. 17, self-assessment.
Assessment of goods. Duty to be self-assessed by the importer or exporter. An importer entering any imported goods under Section 46 or an exporter entering any export goods under Section 50 shall, save as otherwise provided in Section 85, that is, stores allowed to be warehoused without assessment of duty, self-assess the duty, if any, leviable on such goods. Verification by proper officer. The proper officer may verify the entries made under Section 46 or Section 50 and the self-assessment of goods, and for this purpose examine or test any imported goods or export goods or such part thereof as may be necessary. Further, the selection of cases for verification shall primarily be on the basis of risk evaluation through appropriate selection criteria. For the purposes of verification, the proper officer may require the importer, exporter, or any other person to produce any document or information whereby the duty leviable on the imported goods or export goods, as the case may be, can be ascertained, and thereupon the importer, exporter, or such other person shall produce such document or furnish such information. Some major importers has been given the green channel clearance facility. It means clearance of goods is done without routine examination of the goods. They have to make a declaration in the declaration form at the time of filing of bill of entry. The appraisement is done as per normal procedure, except that there would be no physical examination of the goods. Only marks and number are to be checked in such cases. However, in rare cases, if there are specific doubts regarding description or quantity of the goods, physical examination may be ordered by the senior officers or investigation wing, like Special Intelligence and Investigation Branch SIIB. Reassessment of duty by the proper officer if self-assessment not done correctly. Where it is found on verification, examination, or testing of the goods or otherwise that the self-assessment is not done correctly, the proper officer may, without prejudice to any other action which may be taken under this Act, reassess the duty leviable on such goods. Speaking order for reassessment to be passed unless the importer agrees with the reassessment. Where any reassessment done is contrary to the self-assessment done by the importer or exporter, and in cases other than those where the importer or exporter, as the case may be, confirms his acceptance of the said reassessment in writing, the proper officer shall pass a speaking order on the reassessment within 15 days from the date of reassessment of the bill of entry or the shipping bill, as the case may be.
So these are the provisions relating to self-assessment. So duty will be self-assessed by the importer exporter. Verification will be done by the officer, and only where there are some mistakes, the reassessment will be done by the officer. And after reassessment, a proper speaking order would be passed. Now comes provisional assessment. So as I explained, the above provision 17 allows the importer to make the assessment himself, and only checking will be done by the officer. However, where the importer himself cannot make the assessment. He can approach the officer in the first hand, requesting the officer to do the assessment because importer is unable to do. Now, where the officer also is not confident because he feels that, okay, these are some different type of goods. I need to do some chemical testing. I need to do some other investigation before which I can finalize what is the correct rate, what is the correct value. But again, the same 30 days challenge, we want to clear the goods from the port, keeping in mind the port trust requirement of space. So, what the officer may now do, he may take a temporary rate, he may take a temporary value, and he may calculate your duty provisionally. So, what is provisionally? Provisionally means temporarily. So, this at least helps in clearing the goods. So, he will give you a temporary rate or temporary value or both so that you can find out the duty. You take that value rate, you apply the rate value, find out the duty, you pay the tax, remove the goods. But now, since this is not yet final because officer himself is not confident, in such cases, he will ask you to furnish some security so that in future, when the difference comes, you will turn up for payment. Now, what the officer will do in future, now how much future? They have allowed 2 years, which is a good space of time. So after the provisional assessment, the officer should within 2 years finalize the assessment. So how this is done? The importer will give him further required documents or where some testing report is required, that testing report. So all these things are done. Now finally, the officer will sit to decide what according to him is the final correct value, correct rate, and the final correct duty is determined. Time limit given is 2 years, which can be further extended by 1 year by the higher authorities. Now, on the basis of the details which the proper officer has taken from you or where required, brought from outside India, and that is why that extra 1 year time limit is required, or where some matter is in appeal. So until it is in appeal, pending before any tribunal and all, again, you are not able or you're not allowed to do it. So in all such cases, you require extended time limit. So that is what is given. Now in this case, you will finalize the appeal, finalize the assessment, and only in exceptional cases where you cannot do the assessment for all these reasons, like it is there is a stay order given by the court or the board itself has given specific directions. In that case, the final assessment will be pending. Otherwise, the final assessment should be done in the 2 years plus extended 1 year timeline. Now, after the final assessment, so these are the reasons why the assessment may be pending or why the final assessment may not be done. In all these cases, after these issues are resolved and the final assessment is done, if the difference is that you have paid less duty at the time of provisional, you will pay the difference with interest. So if there is any deficiency, you will pay. And if you had paid extra, you will get back as refund. So this is how this whole topic of provisional assessment is there. Now, there is another concept of voluntary revision. Now, what is this point? Now, this is linked with the previous section, that is self-assessment. So, self-assessment is done by the importer. Officer also did not raise any challenge. He also accepted, you cleared the goods. Later on, the importer himself feels that no, there was some mistake and I need to revise whatever I have done the assessment. So importer is allowed to revise, or you can say rectify his own self-assessment. He will do that. He will inform the officer. Again, wherever any tax is paid less, obviously this revision is mainly for less payment of tax. He will have to pay it along with interest. And if by chance it is vice versa, your tax payment was more, you will inform the customs, they will do their checking. And if it is found that you have paid more initially and now you are revising and correcting it, you will be given a refund. Again, verification and reassessment by the proper officer. So whatever revision you are doing, it will be verified and if required, reassessed. And in some cases, revision will not be allowed. What are those cases? Revision is not allowed in cases an audit, search, seizure, summons has already been initiated. See, we are allowing revision where you are saying you have identified the mistake yourself. Now, where the mistake is not identified by you, it is identified by the department because some audit or something was carried out. Now you cannot revise because in this particular case, it is like to now save from the department, because now the department is going to find out the mistake. And see, when department finds out the mistake, it is more like you had attempted to evade the tax by making a wrong classification or wrong valuation. So after department has initiated their action of audit, search, etc., then you don't have this option of revision. Then anyways, the department will do their own calculation and they will finalize what is the correct duty. And at that time, you have to pay with interest and penalty both. Custom finalization of provisional assessment regulations. So fine, some regulations are made as to the timeline in which they should finalize the provisional assessment. You may skip this. This is not relevant. So time limit for finalization, the proper officer will finalize within 2 months of receipt and receipt of an intimation from the importer or the chemical test report. See, the total time limit is 2 years. But within that, once I have submitted all the details, then after submission of my details, you cannot wait for 2 years. You have to do it in 2 months. So that is how it is. Total timeline is 2 years, extendable by 1 year. But why this was provisional? Because you are awaiting something from my side. The moment I submit that, whatever intimation, whatever test reports, whatever verification reports you are requiring, after that, within 2 months, you should complete my assessment. Further, the commissioner concerned may allow for reasons to be recorded a further time of 3 months. So where it cannot be done in 2 months, he can add it further 3 months. So total 5 months. Manner of finalization, the provisional assessment will be finalized as per the provisions of 18. Now what will be done? If there is any deficiency or shortfall in the original amount, it will be adjusted from the security which I have submitted if I'm not paying that difference. And if I'm paying the difference, they will take the difference from me and the security will be discharged. Further, the bond executed at the time of provisional assessment, if security, if any, will be cancelled. So they take the bond also from me. Now, once provisional assessment is done, I have paid the duty. In that case, where no dues are pending from my side, my security is also released and the bond is also cancelled. Where final assessment is contrary to provisional assessment, the proper officer will pass a speaking order on the principles of natural justice. Penalty: if importer, exporter, or his representative or custom broker contravenes any of the provisions, then there is that standard penalty of 50,000. Now comes the provision which is again there in other taxation law, that is audit. Please read, Beda.
Customs Audit, Section 99A. In supersession of on-site post-clearance audit at premises of importer and exporter regulations 2011, Government has notified Customs Audit Regulations 2018. For this reason, a separate Section 99A is introduced authorizing the proper officer to audit the assessment that has already been conducted at the time of customs clearance. Such audit is permitted to the carried out swiftly either at the premises of the auditee or at the office of the proper officer. It may be noted that auditee is defined in this section to include not only the principal, importer, or the exporter, but also persons concerning themselves dealing with goods attracting Section 12 of Customs Act. In the 2018 regulations, auditee is defined in Section 2C to mean a person who is subject to an audit under Section 99A of the Act and includes an importer or exporter to custodian or custodian approved under Section 45 or licensee of a warehouse and any other person concerned directly or indirectly in clearing, forwarding, stocking, carrying, selling or purchasing of imported goods or export goods or dutiable goods. Salient feature of this audit procedure are as follows. Auditee is to preserve records for conduct of this audit for a period of 5 years. Risk-based assessment will identify persons to be audited. Audit will be conducted at the premises of the auditee by the authorized officers who will intimate 15 days in advance of their scheduled visit. Based on the findings, auditee may accept the liabilities and voluntarily discharge the duty, interest, and penalty as applicable.
If you recall, even the GST audit is similar. So in 65, what provisions are there? You have to inform before 15 days. You have to provide all the details. Same thing is here. Now, what are the different types of audit transaction-based audits? So it may not be necessary that they will come to audit everything, because see, in customs they have no rights to audit anything in your business except that particular import transaction. So only the audit of customs will be limited. Like see, in case of GST audit or income tax audit, it is covering your entire business. But in case of customs, it has to be transaction specific audit. So what are the types of which transaction based audits and the premises on the basis of which these audits can be conducted? So audit of transactions and audit at the premises. Selection criteria, the Directorate General of Analysis and Risk Management. So it is also called as DGRAM. They have been entrusted with the responsibility of identifying the potential focus areas. So this DGRAM is also the authority even in case of GST also, where they identify whose audit to be done, and on the basis of their report or letter, the audit of respective auditees are conducted. Now comes the next step. So after all the above assessments is done, now it is time for paying the duty and clearing the goods. If you want to clear immediately, if you want to warehouse, the procedures are different from here. So up till this point, the procedure for warehousing and for clearance is same, that is up to assessment. Now, if here warehousing is to be done, the procedure separates, because now you will not pay the duty. You will only give bond of 3 times the duty and the goods will be shifted to warehouse. So that procedure is different. Here, we want to clear the goods. Again, remember, so these 3 sections, 45 for custodian, 46 for bill of entry, 47 for clearance. And in between this, we studied 17, 18, which is for assessment, provisional assessment, and even 18A, which is for revising the self-assessment. So in 47, the procedure given is that you will pay the customs duty, whatever is computed, and the officer will give you pass out of custom charge order. This is the order which you have to show to the custodian, that is the porters, because the goods are kept with them. And on showing this order, they will release your goods and you can take the goods along with you. Now it is at this point where sorry. So when pass out of custom charge order is given, if you as an importer, when you are now getting the goods, you will identify that whether or not there was any pilferage which has happened while the goods were in port trust authority. So we just read about that if any goods were lost or they were pilfered while the goods were in storage, it is the responsibility of the port trust. But when you will come to know, you may come to know now, because only now for the first time you are getting to see your goods. Maybe till now you may not even have seen the goods. The goods are in the port trust only. Yes, you are allowed to go and check them, inspect them. But let us say you did not do any of these procedures. For the first time now, you are going to take the goods. In that particular case, here, if there is any pilferage identified, that will be informed. And in that particular case, if you have paid the duty on that pilfered goods also, you can claim it as refund, because now the responsibility is on the custodian. Time limit is the importer shall pay the import duty on the date of presentation of bill of entry in case of self-assessment, if you are doing it yourself, and within 1 day from the date on which the bill of entry is returned to him by the proper officer for payment in case of assessment, reassessment, provisional assessment. In case of deferred payment from such due date as may be specified by the rules, and if he fails to pay the duty either in full or part within the time so specified, he shall pay interest. What will be the rate of interest? It is between 10 to 36% as may be notified by the government. So many times it is 18 and in some cases it is even 24. Now what is this deferred payment of duty rules? So you are given a special privilege that you can request the officer to allow you to defer the payment of duty. Obviously, in this case, they will be charging interest as we discussed above, but this gives a relief to the importer that he may, because above it was given if you are a self-assessment immediately, or if the assessment reassessment is done by the officer, you have to pay it within 1 day. Now this may be a very short time because the imports happen in huge quantity. You may at times import the entire container load. In that case, the duty itself may run into lakhs and crores. So you need time to arrange for that. So you can follow this procedure. You can request them for deferment. Now, where uh, the goods corresponding to bill of entry returned for payment between 1st to 15th day, then due date for payment of duty is 16th. 16th day till the last day of any month, the duty payment is 1 day of the following month, and 16th day till the 31st day of March, the duty payment is 31st March. So these are the dates within which you have to make the payment. Further, where the government considers it necessary expedient, it may, under exceptional circumstances, allow payment to be made on a different due date. Electronic payment, now as we saw, everything is digitized. So even submission is electronic and even payment is electronic. So this is similar in GST also. And the deferred payment may not apply in certain cases. If there is a default of payment by due date more than once in 3 consecutive months, this facility may not be allowed. Further, eligible importer shall be permitted to make the deferred payment if he has paid the duty for a bill of entry within the due date and paid the differential duty for the same bill of entry along with interest on account of reassessment. So in short, we are allowing all these facilities to honest importers and who are regular and who are never in default. If you are in default, then the original rule of immediate payment or 1 day payment will apply. This 16 or 15 days gap will not apply. Then mandatory electronic payment, as we saw, you have to now make payment through online only. Then there are different modes given how it can be done. Correct? Now comes the next part. Now this is faceless. Now we all know what is faceless from income tax. So when assessment is to be done, see, we studied above assessment where you make the self-assessment which will be checked by the officer, and only where he finds any mistake it would be reassessed. Or you have to go to the officer for provisional assessment. Now earlier all these things were physical. Now since all filings and everything is done online, that is through the ICAI portal. Now the law has incorporated this concept of faceless. Now what is faceless? So faceless is when you have filed bill of entry, when you have done your assessment and it has to be rechecked or it has to be reconfirmed by the officer, who the officer will be is not known to you. That is what is faceless. And many times it so happens, like I'm telling you from the background of income tax, that let us say my jurisdiction under income tax is Mumbai, Maharashtra, but my file may go to an officer in Agra. My file may go to an officer in Chennai. My file may go to the officer sitting in Assam's some port area. So I may not be knowing who is my officer, and for all further communications, I will be getting letter from their portal asking for some information, for some details, but I never know who the officer is who is doing my assessment. Now this has been introduced in customs also, where they are now. This is still a flagship initiative, so they want to include faceless. Already paperless is done. Everything is now done online. Now they are shifting to the faceless assessment, whereby now whatever details you have filed and it will be checked by the officer, or where provisional assessment is to be done, it will be done by the uh, customs, that ICAI portal. So the portal will forward your details to an officer who will be selected by the software itself, and you will not know who the officer is. So they are trying to remove the physical connect between the person and the officer to remove the chances of any type of malpractices, any type of bribery. That is what is the objective. Also, it will ensure that there is speedier custom clearance, there is no anonymity in assessment, then there is greater uniformity, because now, like again, taking backdrop of income tax faceless assessment, where your matter goes to the faceless, what assessment is done by one officer is also verified by another officer. So within the faceless system also they have interchecking. So this ensures that whatever assessments are done across India, they are uniform. Otherwise, what used to happen? One area's officer is interpreting the provisions in a different manner, some other officer is interpreting in a different manner. So within India, for same issue, we used to have conflicting orders. Now that is all removed because of greater uniformity brought in. So promoting sector specific and functional specialization. Now this is also a part within the faceless assessment of income tax. They have introduced a concept where they have a technical wing. So what is the purpose of this? See, many times specific industries, specific goods have their own characteristics. What applies to textile may not apply to a pharmaceutical and may not even apply to a motor vehicle manufacturer because of the nature of business, nature of the goods, etc. So within the department, see, it is impossible to have technical experts of all fields in all departments. But now what they're doing, since it is faceless, they will develop technical expert team for each field or for each industry. And whenever any such assessment is coming, it would be sent to that technical expert team only. So this will help in getting the assessment done in a more specialized manner. So all these are the benefits of faceless. And now that has been introduced even in the customs as a flagship. Now, payment through electronic cash ledger, electronic duty credit ledger. Now, this point is very similar to what you see in GST. So here also, since now payment is online, you create an online cash ledger where you deposit the money first. So firstly, the money will go from your bank account to your own cash ledger. And from there, the customs duty will be paid. Now, this concept is interesting, electronic credit ledger. Now, see, cash ledger is understandable. What is credit ledger? Because there is no ITC in case of customs. So there is no concept of taking credit. So what is this electronic credit ledger? So credit ledger is, there are some specific schemes of the government under which you are allowed to take benefit of not paying the customs duty or setting it off against some other benefit. Now, in such cases, whatever benefit you are eligible for under customs, that is credited to a special ledger called as the duty credit ledger. And whenever you make imports, I'll give you an example. Let us say you have applied for advance authorization and the advance authorization license given to you is of 100 crores. That is up to 100 crores. You can take the import without payment of tax. So what will happen? They will credit this 100 crore in your ledger called as the duty credit ledger. Now, when you are importing and you want to utilize this advance authorization benefit, you will debit from that 100 crore. So even government can control that, okay, you have taken permission for duty-free imports under some special scheme like advance authorization or EPCG, and we have given you the limit of 100 crores. So whether you have utilized that 100 crores or not, the government also comes to know. So what is duty credit? It is not like input tax credit because in customs there is nothing like input tax credit. So here the credit is of any type of benefit, any type of scheme which is provided to you because customs has many such duty benefit schemes whereby you are not required to pay the customs duty. Like, for example, you have exported some value of goods. So I give you some import license against that. So you have made export of 500 crores. I give you import license of 100 crores. So again, that 100 crore will be transferred to this duty credit ledger. Correct? Then comes this point, procedure for disposal of goods not cleared. Now this is where you will find that 30-day rules. So if there is any goods imported from a place outside India which are not cleared for home consumption or warehouse within 30 days or within such time as the proper officer may allow, or if the title of the goods is relinquished. We studied this. The importer has option to relinquish the title. So in all these cases, if you're not clearing in 30 days or you yourself have relinquished the title, then the goods are confiscated. The custodian will now proceed to sell these goods because see, ultimately the government wants duty until and unless these are hazardous or prohibited, in which case they are destroyed. Otherwise, now the procedure for selling the goods starts, selling in the market by auction. Again, there are different circulars given how the auction will happen, how you will decide the successful bidder and all. So most important point that you have to take from here is the 30 days time limit. So this is how that 30 days time limit come, that you should also file your bill of entry after the ship has come within 30 days so that this can happen. From here only that concept of warehousing without warehousing comes, because if you are not able to clear it within 30 days, your goods may get forfeited. So to avoid that, the customs may themselves, you may request them and they will temporarily shift it in warehouse and you will clear from there. That is warehousing without warehousing. Now comes another concept That is what is storage of imported goods in warehouse pending the clearance. So this is the same point of warehousing without warehousing, where you can store the imported goods in warehouse pending clearance. So it is that 30-day issue, because in 30 days you have to clear the goods, but you do not want to warehouse them. So temporarily you keep it in warehouse so that you even satisfy this 30 days limit of custodian, and at the same time you get extra time to clear the goods. So this is the same point, warehousing without warehousing, what we studied above. This is the formal provision. So with this, we have completed the major part of import procedures. Now we have some small part left for export, but that we'll do after a break. So I'll take a small break. You can also go and have your breakfast. We will reconnect around in 15 minutes and we will take forward the remaining procedures. exports. So the definitions: export, which means taking out of India. Export goods means goods which are to be taken out of India. An exporter means person who holds himself out to be exporter besides the original owner. Now, control over export goods. Can you please read, beta? Prithvi?
Yes, sir. Control over export goods. It would be convenient at this juncture to discuss the provision relating to the export of the goods in so far as it applies to the master of the vessel or his agent. The steamer agent comes into the picture only after the customs have permitted the export goods to be shipped.
So, in case of import, firstly, the responsibility is on person in charge because it has to first come to the port, only load it, unload it at after getting the entry inwards, then unload it at proper place. But here, in case of export, the responsibility of the person in charge will start only after the permission is given. Now, which permission? Over there, we had permission of entry inwards. Here it is permission of entry outwards. Again, what is the permission of entry outward? That you can load the goods on the vessel and the ship can leave India. Please read.
Export goods not to be loaded on vessel until entry outwards granted. Section 39 stipulates that export goods are not to be loaded on vessel until entry outwards is granted. The master of the vessel shall not begin the loading of any export goods other than baggage and mail bags until an order has been given by the proper officer granting entry outwards to such vessel. This restriction is for vessels and not for aircrafts and vehicles. In sum, for loading of goods or for export, the following requirements are to be fulfilled. Entry outwards to be granted under Section 39 in case of vessel, shipping bill or bill of export or bill of transshipment under Section 50, late export order under Section 51, boat note under Section 35 in case the vessel is anchored away from the wharf and the goods are carried in a boat to the vessel.
So you'll find that exactly similar procedure is there on the export side. So here also for loading, you require the entry outward permission, plus you require the late export order permission. Without these, the goods and the ship cannot be leaving India. So export goods not to be loaded unless duly passed. So you have filed shipping bill of export. The officer will check it. If it is satisfied, it will give you the permission and only then the goods can be loaded on the ship and it can be taken out of India. Now, delivery of departure manifest. So we had the import general manifest at the time of import. Now you have the export manifest or the departure manifest. Now what is this? Same thing. Like import manifest, here export manifest is what? After the loading of goods is done on the ship, before the ship leaves India, it has to give a list of all the goods which are there on the ship, details of all the goods. Customs will do what? They will match it with the shipping bill to ensure that whatever goods are there in the ship's export manifest, they tally with the goods of different exporters which were brought to them and they had checked the shipping bill or the bill of export. So they are cross-tallying to ensure that all the goods loaded on the ship as per the export manifest are all what they have already checked and passed while doing the checking of the shipping bill. And once everything is found in place and there is no restriction on the goods being taken out of India, they will allow the permission and the ship can leave. Now this export manifest again can be amended if there was any mistake and it was without any intention of evading tax. Similar to now report of goods, you have to now also submit the report of passengers who are there on the ship or on the aircraft. Again, the custom officer will check whether all these persons are legally allowed to leave India. Is there any order of any court relating to any person that that person cannot leave India, or is there any action going in any Indian court on any person? So if in all those cases, the custom officer has the power to detain that person. Otherwise, after going through the names and details, the custom officer is satisfied, it will allow the permission. What is this permission? The permission is a written order allowing the ship to leave India. 42 says no ship or no conveyance can leave India without this permission. So after making all the above checks, the custom officer allows the permission to leave India. Now, What is the procedure for clearance of export goods? So whatever we studied now was the last part. Now we come to the first part, that how these export goods are cleared. Cleared means assessed. So the person, that is the exporter, who wishes to send his goods outside India has to again electronically submit the request. The request is submitted in the form of shipping bill in case of export by ship or aircraft, or bill of export in case of export by vehicle. Then this will be submitted online again on the same customs portal. Again, the custom officer will be checking the details, the value, and as I said, in 99% export, there is no export duty. But if these goods are falling in that 1% category and export duty is applicable, it will check for the computation of export duty. Even for the other 99% goods where export duty is not applicable, it will try to ensure by maybe doing physical verification of the goods that it should not happen that you are actually sending that 1% goods which are liable to export duty, but you are wrongly classifying it in some other category to get out of export duty. So all these things are checked, assessed by the officer, and when he finds that all the details given in the shipping bill is proper, he will assess and he will pass the shipping bill. After that, if duty is payable, you pay the duty, or whatever procedures or whatever conditions are imposed by the proper officer, you fulfill those, and whatever charges, if any, are payable, you make the payment of the charges. After all this order is passed by the officer, which is the clearance order, which is called as the let export order. Only after this order, the goods can be loaded on the ship. Now, all this was the general import export procedure. Now we come to a special procedure for postal articles. Now again, please visualize. So let us say a person sitting outside India wants to send some goods to India, but now he is not following the regular mechanism of going to the port and loading it on ship or aircraft. Why? Because the quantity is small. Like, I'll give you a real life example which I have handled. There is an Ayurvedic doctor in India who is, there would be many, I'm talking about this example because this I have handled. So he prepares some skin related medicine, some paste, some ointments, and his skin related products have good demand in foreign market. But how this demand is there? It is through individuals. He is not supplying to any shops or any pharmaceutical agencies. He's selling to individuals. So individual contact him, and now because of this advent of this technology, internet, and so many platforms, it is more easier for him to do. But he's getting orders from individual persons. So when he's getting orders from individual persons, he cannot go for each small order to the Bombay port and do the entire procedure, and it is not required. He simply he has finalized two courier agencies who are doing international deliveries also. So through one of them, whoever is conveniently available or whose charges and timelines are matching his requirement, he hands over that parcel to them. Now, when he is handing over the parcel to them, that particular person, because he will now have to take it outside India, that courier agency. Now, here we can also talk about postal. Slightly, there is one difference. Otherwise, courier and postal procedures are same. So, I'm giving you first example to understand practically what is happening so that you can understand these provisions better. So, what this courier agency tells him, boss, since these goods have to be taken outside India, you fill in this form. The form, besides giving the detail of this doctor and the buyer, it is also majorly containing details of the goods that are there in this parcel. This is the first very important point. So whenever goods are sent by courier or post, now here I am talking about import because again on export side, majority things are exempt. On import, the person who is sending the goods from there is giving the details of the goods in a form. That goods are then sent by that country, whatever courier agency or postal agency, to their foreign customs department, who will check the goods. If their country allows the export, the goods are shipped to India. Now, all these goods are coming through sea only. So, in the same ship in which you regularly import goods, for which we saw procedure above, the postal authorities or the courier people, they have booked one space in the ship where all their articles which are coming through post or courier are kept. So in the same ship, the goods are coming, but here you are nowhere involved. Why? Because for postal articles and courier, the procedure is different. Now let us say you are the importer and you are getting some goods from US or from Russia, which is coming through post. Now, when these ships come to India, in the IGME, Import General Manifest, which the master of the ship is filing at the port, he will also mention that these articles are the postal articles because they have been loaded on the ship either by the courier agency or the post authorities. Those articles are from there, that is from the port, directly sent to the Indian Foreign Post Office. If you remember, we had seen the definition at the start. So these goods are sent from the port to our Indian Foreign Post Office. Now, when all these postal articles are sent, with every article, that form is also attached, which the exporter had filed, giving details of the goods. Now, in our Indian Foreign Post Office, the custom officer seated over there, he asked his clerk to make a list of all these goods which have come via post or courier. Now, in this list, the person is required to make categories. Now, on what basis he is making the categories? On the basis of that form which that foreign exporter has filled in. He has forms of all the goods. He checks the details and he categorizes the goods between the same three categories: importable into India, restricted importable into India, or prohibited into India. And he makes a list classifying the goods into these three categories and he submits this list with the custom officer. So this list is prepared by the post office person sitting in the Indian Foreign Post Office, and he sends the list to the customs office, whoever is the in charge of this Indian Foreign Post Office. Now, what that custom officer will do, on the basis of this list prepared and on the basis of details written in the list, he will make assessment. So for the first category, which is importable into India, he will assess the value rate. If he has doubts, he can even ask the post office person to send the goods for physical checking, or he can go there and do physical checking of all the goods at one time. Or where required, some details are more required, so they will send a letter to you. Who are you? You are the person of whose this postal article or courier article has come, to get more details if they want for the purpose of their assessment. Similarly, for those goods which are in the second category, that is the restricted category, again the officer will check the description. If the restriction can be resolved by getting some information, some certificate, some declaration, again they will contact you. Such and such article has come and it has these restrictions, conditions. If you satisfy, you will get the article. So when you receive this letter from the post office, you have to comply with the letter, send them details or whatever information they want. After this, the custom office or the custom officer who is handling this will start doing assessment. For the first category, importable, he will write the duty. So in that list given to him by the post office person, against the name or the items, he is writing the amount of duty. Then against the second category, which are restricted, wherever the restrictions is resolved, he is again computing the duty, writing the duty. Where it is not resolved, he is writing confiscate. In case of same the third category, prohibited anyways, there is nothing left, but only prohibition is there, confiscation is there. So he writes confiscate. And this list is sent back to the post office. Obviously, the copy is kept with the Foreign Office Customs Department. Now, on the basis of this list, the post office person will now again categorize the goods which can be sent to the importer and duty collected, and the goods which have to be confiscated. Those goods are then sent back to the customs department so that they can decide whether to destroy them or auction them and collect the duty. The goods which are to be sent to the importer, against which the custom duty assessment is done, the post office will deliver these goods. So you will have a postman coming. Nowadays, we don't see postman because now all letters and all are coming directly. So, and even now goods we are not getting through post, we are getting through courier. So you can read parallelly. So the post office person or the courier boy will come to your place. He will give you the parcel. He will give you the assessment details done by the customs for that. And you are supposed to pay the customs duty at that point, that is at your doorstep. On the basis of this, only you will be given delivery. If let us say for any chance you say, no, I am not ready to pay the customs duty, it is like relinquishing your title. How we have that provision, na? That importer can relinquish his title. In that case, the importer is not required to pay any customs duty. So the same thing happens over here. You may at your doorstep deny to take the goods and pay the customs duty. The goods will be taken back to the post office or courier agency, and it will be sent to the customs department saying that for these we did not receive duty, so we have brought them back. And again, they will auction it and sell it. For the cases where duty is collected, the duty is initially collected by the courier or the post office and then remitted to the customs department with the list that, see, these were the assessments done by you, and this is the amount we have collected, and this is the mechanism through which we have paid. Now, in this, there are only two provisions, 83, 84. What is the important point? In case of regular imports, you file the bill of entry, and on that basis, assessment is done. Most important, that relevant date, that is the time of supply is decided, which is whichever is later, your filing of bill of entry or the entry inwards, whichever is later. Now here, nobody is filing bill of entry. So what is the time of supply for deciding the rate of duty and the valuation? So for this, section 83 says that when the post office person is preparing that list and giving it to the custom authority, that date of giving the list to the custom authority so that they can do their assessment, that list is deemed to be the bill of entry, because no importer is coming there. It is done by the post office or the courier agency's person who will prepare the list, send it to the customs for doing the assessment. That date, the date on which this list is given, is what is the relevant date. So the rate and value in force on the date on which the postal authorities or the courier present to the officer the list containing the details of the goods. So this date on which the custom officer will receive the list from the post or the courier agency, that date is the relevant date. Whatever duty rate applies on that date will be applied by the custom officer while making assessment. Similar, where goods are arriving through post and the list containing the particulars is available is filed by the postmaster before the arrival. So they file this list before, because anyways nowadays through online all the details are sent prior. Then, and the list is filed to the customs beforehand, even before the ship has come. The list shall be deemed to have been filed on the date of arrival of the ship. So same rule, whichever is later. So if if the list is given to the custom officer before arrival of ship, then the date of arrival of ship is the relevant date. If the list is given to the custom officer after the arrival of the ship, the date of giving the list is the relevant date. Similarly, the rate of duty and tariff value applicable on any goods exported by post or courier shall be the rate in force on the date on which the exporter delivers such goods to the postal authority. So in case of export, the relevant date is much earlier. So in case of export, what you do, either you hand over the goods to the postal courier agency boy, or you go to the post office and you give the goods to the postal authorities and you fill in that form. That date is the relevant date for determining the rate of duty. And then this procedure is given, which I just explained in detail. So goods will come, they will be sent to the India's foreign post office. From there, the person will prepare list and send it to the customs. Customs will do assessment, send back the assessment to the foreign post office or the courier agency. The courier agency or the post office will now start delivering the goods to people in India and collecting duty and sending the duty to the customs. Now coming to provisions relating to stores. Now, what is special about stores? See, stores is something which is not meant for import or export. They are meant for being consumed by the ship itself during its journey. So let us take an example again of import first. So a foreign ship has come to India. Let us say a ship which has started its sailing from UK, reaching 2-3 countries, now comes to India, and maybe from here it is going to go further to other countries, and after a total journey of 3 months, it will go back to UK. Now, in such cases, when this ship has come to India, in the import general manifest, that is the details of goods, there is one column in which all the ship stores are written. Now, in ship stores, what would be written? These many items are of food, which will be for passenger and crew. These are all liquor, which will be for passenger and crew. These are all some special bakery items. All these details will be written. Second, these are all spare parts which we carry. These are all medical items, because if something happens to any person, so these are a list of medical items we are carrying, then something else, then these are this many barrels of fuel we are carrying. So all this list is given. Now important, are these goods to be imported into India? No. But till the time the ship is in India, the goods are carried in the ship. They are there in the ship. So we need to provide some procedure for their control. So here the procedure is not for duty. In all the procedure that we are going to read, there is only one section asking for duty. All other sections are saying no duty, no duty, no duty, because your purpose is not to import these goods into India. So what are the different provisions? First, till the time this foreign ship is in India, now it may be 10, 15, 20 days, because that much time is required for first unloading the goods and then reloading the goods and passengers. So that much time may be required. So till that time, whatever stores remain on the ship and are not even unloaded, there is no question of duty, but only for the purpose of surveillance and monitoring that tomorrow it should not be smuggled into India. We are only having a control and watch on that. So in the IGM, we will check how many store items are there. And again, when the ship has to leave, it has to again file the export IGM. In that, we'll again match if the list is same. And if the officer wants to do physical verification, if on that it finds the same quantity of liquor bottles and all, it means nobody smuggled anything. So the stores which are there on board the ship, no duty. First provision. Second provision. It may happen that this ship's journey is ending in India. So this was a ship which started from India, went everywhere and come back to India. Now, this may go after 2-3 months because it is now going for its maintenance. So what this ship will do, now it will unload everything, because now it is not going to go on voyage, or its next voyage is after 2-3 months. So what happens, this ship will even unload the stores. But again, are these stores to be cleared into India? Maybe not. Then what will happen of these stores? These stores will be loaded on the other ship which is going out of India. But now they are unloaded. So in first scenario, the stores remain on the ship, no duty. Second scenario, they are unloaded, but then they are kept in the warehouse till they can be loaded on the other ship which is going out of India. Again, for these warehouse stores, there is no duty. Then comes the third category. Instead of unloading, this ship, which is now completing its journey, is shifting the stores to another ship which is already parked there, which is going to leave in 2-3 days. So this ship is shifting the stores to other ship. Again, no duty. All this is only for surveillance and monitoring, that act in any of these situations, nothing should be brought into India, right? So again, if it is transferring it to another ship, which is called as transshipment, no duty. Fourth scenario, you are unloading the stores and now they will be cleared in India. Why? Because maybe this shipping company has no other journey, nor there is any person to whom it can give the stores, and maybe the stores are food items, medicines which may get expired. So better is clear it and use it in India. Now if they are clearing it into India, only then they are required to pay customs duty, because until unless you clear in India, why you require to pay duty? Similarly, let us say now some ship is going out of India and it requires some additional stores from India. So it will require food items, medicines. That also has to be replenished, because it was carrying many things which was consumed during its journey up to India. Now for forward journey, it require more. So it will take ship stores. Now if these ship stores are loaded on the ship from another ship from the warehouse, no export duty. Only if they are cleared from India to the ship, there is only a question of export duty, but that also has been relaxed. So technically, there will be no export duty in this case. So these are the various provision. The stores are sent to the warehouse so that they can be then loaded on some other ship. No duty in this case. If they are transferred to another ship, no duty in this case. Then any imported stores on board a vessel or aircraft. So till the time the goods are lying in the same ship on board, no duty. And then application of section 69 and chapter 10 procedure to stores. Now what is 69? 69 allows warehouse goods to be exported on payment of export duty. And 74, where duty paid imported goods are exported within 2 years, such duty be given as drawback. So both these section 69 and chapter 10 are made applicable to ship stores. So what is this? If you are keeping the ship stores in a warehouse and later you are exporting them, then if there is any export duty, you can claim it. Second, if you are exporting them, we'll study in a separate chapter called as drawback. Whatever duties were paid on these goods in India, when you export those goods, the duty is refunded back to you, which is called as drawback. So you can even take the benefit of drawback. Next, supply of stores. One ship giving the stores to another ship, no problem. It can also be done duty free. Only when you are clearing it into India, then only the duty provision comes. Next, special provisions regarding ship stores applied to Indian naval vessels. So these ship stores are not given to any other commercial ship. It is given to Indian naval. Why? Because again, our Indian Navy is also going out for some naval practice or for whatever reasons. If these ship stores are transferred to them, same rule, they are treating it as export. And firstly, no duty is payable because you did not clear it into India. Second, since they are treating it as export, you get all the export benefits. So again, section 69 in chapter 10 procedures become applicable. So these are all special provisions relating to ship stores. Now coming to the next part, which we will do the basic part today and some technical part in the next class. So this is dealing with the baggage. Now, firstly, what is baggage? So baggage is the luggage which the passengers or the crew members are carrying, which contains their personal belongings. Now, a very big question relating to baggage is, let us say I'm a person who is traveling by flight. I'm a person coming from France to India. I'm going to stay in India for 10 days for some work. So definitely I'll be bringing along with me in my luggage many things which are for my use. They may be for my personal use, or let us say I'm carrying some gadgets, something which will be required even for my professional use till the time I'm in India. Now, the question is, when a person is taking his luggage, bringing it in India, which he has brought from outside, whether customs provision should apply? The first answer is yes. Why? Because if you remember, we just studied today at the start, goods definition includes baggage. And second, the charging section says goods imported into India. So baggage, which is brought from outside India, brought into India, is also fitting in the definition of import and also fitting in the charging section. Now, again, the same point. Please understand, students, that the purpose of customs is not only duty. The purpose of customs is also to ensure that now whether import and the charging section applies to baggage, answer is yes. As I justified, it is falling in goods, it is falling in the definition of import. So charging section applies. But now coming to the point, do you really want duty on personal goods? So it is my day-to-day, my wearing apparels, my some normal food items, my medicines, my laptop, which I'm bringing into India. Do you want duty? The answer is no. But then, as I said, customs is more for control and not only for duty. So first, everything is covered. If you remember the definition of goods, even currency is covered, even the ship itself is covered. Now, in this particular case, when all these things are covered in the definition of goods itself, now comes the main point. What is the main point? The main point is that firstly, the law applies to baggage at par as it applies to any other goods. Now, firstly, what it says, we are first going to do assessment of baggage because it is also import. Now comes the first step, which is baggage declaration form 77. What it says, Whenever a person is coming into India, you have to fill in a document, a form. And this happens always whenever a foreign bound person is coming to India, or a person who is in some foreign ship or aircraft lands at India. You have to fill in these details. And this is the most important form, because a mistake here can lead to grave consequences. So the person fills in this form. In this form, the person gives details of whatever he is carrying in the baggage, he or she. So wearing apparels, necklace, jewelry, laptops, everything, even pistols and all. In fact, you should declare. Let us say you're carrying some drugs. See, in different countries, things are allowed. Our country's law is different. Your country law is different. We cannot force a person that you cannot carry pistol, you cannot carry drugs. But in their country, drugs are, let us say, are not banned like how they are banned in India. In their country, carrying pistol even without license is allowed. For example, in our country, licensed pistol is allowed, that also to specified persons. So there are so many differences in every country's rules, regulations, culture. So in that case, we don't have a problem. You should first declare. So first section 77 says, fill this baggage declaration form and make honest declaration first. Now in this form, whatever you have declared, 78 says that will be the basis for assessment. So again, we want the time of supply, that is the relevant date for deciding the rate of duty and all. The relevant date is the date of this declaration form. Now comes the main point. When these goods are, or this baggage is brought into India, and this baggage declaration form is filled in, that again goes to the customs. The customs will check all the baggage declaration form, and if they find any prohibited goods, they will mark it. It will be informed to the person that you will have to remove these goods, like pistols, some drugs, some medicines. Even some medicines may be banned in India. It may not be drugs, but it is banned in India. You have to remove it. There is a we have again a concept. I'll explain that later. That you keep it here, and whenever you are returning back, you take back the goods. We don't have a problem because you honestly declared anything, even prohibited, you are bringing in your bag. You don't have a problem because you declared it. You keep it here. You go to India, complete your work in 10 days. If you are going by the same airport, no problem. If you are going by other airport, we will send these goods in 10 days to that airport. You can collect it, and they give you some uh, form or document that proves that these goods are with customs. Second, wherever the goods are liable to duty, they will assess the duty and they will ask you to pay. Again, here you are given an option. If you feel that you don't want to pay the duty, why? Because maybe you may not consume it, or you may do without those goods in India. No problem. You again keep the goods here. We will give you a form that we are having these goods of yours. You again go, and while returning back, you take the goods. So both things, prohibited goods and goods on which tax is leviable, both goods you can keep here, and you can go in India, perform your work, go back, we will give you the goods. Third, you are paying the duty. Now, when duty payment comes, the best part is that they have exempted baggage from IGST and the GST compensation. So only you have to pay the custom duty. And here they say we will not go to specific classification because these are baggage. We will only charge a flat custom duty rate of 35% plus the custom surcharge, social welfare surcharge, which is 10% of the custom duty. So your effective rate of customs on baggage is 38.5%. No IGST, because see, anyways, this is personal goods, it is not for business. So we anyways logically also should not charge GST, because GST is not for personal items. It is only for anything which is in the relation of business. Since it is not in the course of business, we will not charge GST on this. Now comes the most important part. Whether you have to pay this 38.5% on everything that is inside your baggage, answer is no. There is, now all this is, we'll study later. There is this duty exemption. What it says? 79 says that we will not ask you to pay duty on everything. We will allow many things in this baggage duty free. Many things. Only these certain items, as I said, now we'll discuss this about this separately. These certain items will not allow exemption. And besides the above items, for remaining items in your baggage, we have kept some monetary limit. If the items in the baggage are up to that monetary limits, and these limits are given in the baggage rules, If your goods carried in the baggage is within the monetary limits, it is allowed duty free. So this is what is very special provided in section 79, that your goods, which is not goods means the baggage, can be allowed to be cleared duty free completely. Now, in this particular case, if they are allowed to be cleared duty free completely, then the next point will start. The next point is that the assessment will be done. You will apply the baggage rules, whatever is applicable. So we have a whole set of baggage rules in which from where you are coming, what is your period of stay, how you are coming, whether by land route, etc. So there are different criterions given, and on that basis, they determine up to what extent we will allow you duty free. And to that extent, baggage is allowed duty free, and only for the remaining items, they will charge that 38.5%. That also it is an option. If you don't want to pay, you keep it here, like how you are keeping the prohibited goods here, you keep these dutiable goods here, you go and you can return, and at the time of return, I'll give you back the goods. Sanjay is asking a very good question. How will the baggage items be valued? Sanjay, when we go to the this exemption part, you will realize that, like, for example, I'm carrying 10 shirts, 5 trousers, my belt, my wallet, everything. Those are anyways allowed duty free because these are clearly visible that these are used items. For them, no valuation is required because they are duty free completely. But either if you are carrying something new brand, like let us say you have purchased a new mobile phone, it is still packed, then they have a monetary limit. You are carrying some jewelry, they have a monetary limit. So this is how they have kept monetary limits, which is mainly for the new items which you are carrying. If it is your personal day-to-day use items, there is no valuation. Now, why no valuation? Because it is allowed fully duty-free. Now coming to these new items which you are carrying. So here you can see they have said that articles in the baggage of the passenger in respect of which the officer is satisfied that is for the use of the passenger or his family. So this is fully duty-free, or is a bona fide gift souvenir that the value of such article and the total value of such articles does not exceed the limit. So this gift, souvenir, etc., which you are carrying, which is a new item or a fresh item, for that there is limit, and within that limit, it will be exempt. Now coming to your point, how they will value. So they ask you to declare a value. So if by chance you are carrying some bill or invoice, show that. If not, you say a value. Again, the valuation provision triggers in. They want, they will accept or they will reject. If they reject, they will do their valuation identical, similar. So that is how the valuation will be done. But I understood your point, how they will do valuation for used items. So no valuation for used item required because if they are used items, they are anyways duty free. So here also you will see articles in the baggage of the passenger member in respect of which the said officer is satisfied that it has been in use for such minimum period as may be specified. So where it is in use, fully free. Besides used article, only the bona fide gifts and souvenir. Now, what is bona fide? Which you have declared. If you have not declared something, please remember. Let us say you forgot to declare something and it is found in your bag. It is assumed to be smuggling attempt, and then they may take either prohibition procedure or they may levy the tax, what we studied, with interest penalty. Not interest penalty. Otherwise, maybe this could have been released duty free because it is falling in that monetary limit. So that is why this bona fide word is very important. That is why you should declare everything whenever you are coming from out of India. So there are 3 classes of goods: personal effects, which have been in use of the person for a minimum period. This is completely duty free. Household effects, again, so if you are carrying such articles which are not for personal use but are for household use, again, they may be allowed duty free, but then you have some monetary limits, and same as with gift articles. Now, 79(2) says that the government will make rules for all these things. What? Determining how much minimum period it should be in use to allow it duty free. Then what is the value up to which the other articles which are not allowed completely duty free, some monetary limits is kept. What should be that monetary limits? And what are the other conditions that one has to fulfill? Now, all these things, minimum period of use, monetary limits up to which duty free is allowed, and conditions, they will be provided by way of rules, and these rules are the baggage rules. And here you will see the conditions, the categorization, the monetary limits which is provided. Fine. So everywhere you will find use personal effects are always fully free, no amount is kept. But for other items which are not your personal effects, for them some monetary limit is kept. And then you have these annexures 1, 2, 3. Now, what are these annexures 1, 2, 3? It covers those cigarette and all those things. for which they may not allow you duty free, they will be taxable always. So see, I said now we'll discuss this separately. So firearms, cigarettes, for them, that 50,000, 30,000 limit will not apply. You have to compulsorily pay duty, or you can keep it outside and go. No problem. So for certain items like Annexure 2 covers day-to-day items, these are mainly the items required by your family. So these are not personal use. Huh? These are your household items. As you can see from the name, you cannot call them as your personal use item. These are household items. Correct? But fine, we stop over here. Anyways, these are mechanical. You can simply read them. And if time permits, in the next class, I'll take 10-15 minutes to cover them. Fine. So this is the end of the entire importation procedure with all the various special cases of importation. So I conclude my class over here. Just an important information you all would be knowing. 2 days back, that is on 21st, government notified the 4 new labor codes. If I'm not wrong, it has replaced some old 29 old laws, and they have now been converted into 4 labor codes. Students, as a professional person, you should have the habit of keeping yourself updated. And maybe this can also become a special area of practice, because same like customs, labor laws, not many professionals are venturing into, and today it is applicable to every business who fits in that criterion, whatever is given. So maybe post your qualification, you can keep this in mind, but till the time you are giving your exams, at least be updated as to what broadly this labor laws are dealing with. Correct? So with this, let us conclude. Thank you very much. And we connect again in future for the other topics. Fine. Yes. Thank you all. Especially thank you, Prithvi, for the backup support of reading on my behalf some part. And everybody for involving and keeping this session. Though it was procedural, many times procedure seems boring, but because of your active involvement, it was fun. And I realized very late that it is already time up. So anyways, thank you all. Thank you. Good day. Yes, Ashokji. Happy Sunday to you, Ashokji.